Today what we are going to learn is cost accounting system. Please understand, we normally write down books of accounts only for financial accounts. That is, we pass journal entry, debit, credit only for financial accounts. But if you want to find out cost of production, what is costing profit and loss account, then you even draw costing accounts. And as it is accounts, there will be journal entry, there will be ledger accounts, and even sometimes there will be trial balance. Cost accounts is divided into two parts: integrated cost accounts and non-integrated cost accounts. What are integrated cost accounts? Try to concentrate. Financial books of accounts. What is financial books of accounts? Trading account, profit and loss account, balance sheet that we prepare in accountancy is financial books of accounts. And costing books of accounts are prepared combined. Combined is also termed as integrated. So they both are same. You maintain only one set of books of accounts, that is integrated cost accounts and financial books of accounts. What is non-integrated books of accounts is you keep financial books of accounts and costing books of accounts. These are separate sets of books of accounts. So there will not be only one set of books of accounts, which is trading account, profit and loss account and balance sheet. There will be another sets of books of accounts which will be costing books of accounts, non-integrated cost accounting system. What we are going to learn first is non-integrated cost accounting system. In our syllabus, there is also integrated cost accounting system. We are learning accounting system, so we will have to learn journal entries, we will have to learn ledger accounts, we will have to learn trial balance, whatever comes into picture. We are going to start with non-integrated books of accounts. Non-integrated books of accounts, and this is cost accounting system. So when you started learning your financial books of accounts in your 11th standard, then you learned it in 12th standard, then you learned it in foundation. Costing books of accounts we are starting it today. So we will have to learn how to pass journal entry, how to prepare ledger accounts, and how to prepare trial balance. Yes, there will be no trial balance. There is only journal entry and there is only ledger accounts. Normally in accounting, we first learn journal entry and then we learn ledger account. Let us go for learning cost accounting system other way around. We are first learning ledger accounts and then we will be learning journal entries. So let us try to learn ledger accounts. What happens when the transaction happens, what journal entry will be passed, and where in ledger account it will be posted. Please understand, we are learning separate costing books of accounts. So we are not concerned with what financial accountant has passed, what normal accountant has passed journal entry. We are not concerned about it. We are preparing our separate set of books of accounts. This is non-integrated costing system of cost accounting. We are going to draw some ledger accounts. Now it is advisable you don't draw it because you will not be able to cope up with me. First ledger account that is prepared is raw material or stores control account. Now I will explain each and every account. This is practically raw material stock account. And when it is a stock account, what is the rule for stock account? Stock is a real account. Debit what comes in, credit what goes out. So whenever raw material will be coming in, I will be writing it on debit side. Whenever raw material will be going out, I will be writing it on credit side. This is it is what it is termed as raw material or stores control account. Why the word control is used, that also will be understanding. Raw material or stores control account. Let us try to understand what will come on debit side of this account. When you purchase a raw material from the market, from the creditor, or you purchase it on cash, what journal entry we pass in financial books of accounts? Purchase account debit or raw material account debit to cash. And if we have purchased it on credit, it is raw material account debit to creditors. We will be passing similar type of journal entry. Raw material account debit. Why it is written on debit side? Debit what comes in. If you purchase raw material, material will come in, your stock will increase. I'm writing it in second place. It will be to cash. The answer is no. Why? I don't prepare cash account in cost accounting system. I don't want my cash balance. What is my cash situation? I don't want my profit and loss which is in financial books of accounts. I don't prepare a cash account. But to pass a journal entry, I require a second effect. First, debit effect is raw material stores control account debit. 2. I will be preparing a temporary account which is general ledger adjustment account. It is also termed as GLA account. Why I am preparing it? Because I don't have cash account. I'll have to pass credit entry. I will prepare GLA account. Suppose I have purchased raw material worth rupees 10,000. So I will be writing it on debit side, which is writing it on debit side 10,000 rupees. I have purchased raw material. So what journal entry I am passing? Raw material or stores control account debit to general ledger adjustment account. Please understand, as it is a stock account, there might be opening stock. And here there was opening stock of 5,000 rupees. Sir, by which journal entry opening stock will come? It will not come by journal entry. It will be carried forward from last year. And if you are preparing this monthly, it will be carried forward from last month. It is opening stock of raw material. If you return this raw material to your supplier, raw material stock will decrease. And so I will be writing it on credit side. By return to supplier. What is the journal entry we pass in financial books of accounts? We debit the creditors and we credit raw material, or we credit goods account, or we credit purchase account. So creditors account debit to purchase is our journal entry in financial books of accounts. What journal entry we will be passing in costing books of accounts? Please try to understand. This will go out, so raw material account will be credited. Raw material control account will be credited. What will be debited? Creditors account. I don't prepare creditors account in cost accounting system. I don't prepare cash account. I don't prepare debtors, creditors, none of such type of accounts. I'll be preparing cost accounting system. So I will be writing down GLA. Yes, in bracket I can write down it is nothing but return of raw material. How many raw materials are returned to suppliers? It is 2,000. We are just understanding one thing, which is the raw material stores control account. We have passed a journal entry GLA account debit to raw material accounts when raw materials are returned. Now try to understand how many raw materials were issued. Before that, I am writing down closing balance. My closing balance was 3,000. So how much raw materials or stores were issued to production is 10,000. If you balance both the sides, it is 15,000. This should be 15,000, but 10,000 is the balance. So 10,000 will be issued to production. Please concentrate. If I have issued it to production, I have issued it to production. Then say I have issued, I will be writing 6,000. 6,000 rupees raw material to production. Why it is credited? Because it is going out, it will be credited. Where it will be debited? Please concentrate. Still there is a difference of 4,000. I'll explain you what is that. But 6,000 raw material is issued to production. As we have learned somewhat costing, we should be knowing this account, which is WIP account, work in progress account. Whatever raw materials are issued to production, they will not immediately be converted into finished goods. So I am not adding it in finished goods account. This is finished goods account. I am debiting it to work in progress account. Work in progress account debit to raw material control. How much rupees? 6,000. So whatever raw materials are issued to production goes where? It goes directly over. Your raw material stock will decrease. Now it is a cost of WIP. Now it is cost of work in progress. I explained you why we are not debiting it to finished goods account. Just because finished goods account right now is not in picture. First, raw material will be issued to WIP, and WIP will convert goods into finished goods and then issue it to finished goods account. Sir, what about 4,000? There is a balance of 4,000 also. So I will be writing down over here by WIP. So whenever the materials are issued to production, what is the journal entry passed? WIP control account debit to raw material control account. This is the journal entry which will be passed. Sir, what about 4,000? This 4,000 are raw material or stores which is issued to production for maintenance or for something else. But it is indirect raw material. So they are not directly used in production. They are indirectly used in production. If something is indirectly used in production, you know it is not a direct cost, it is an overhead cost. And so if it is an overhead cost where we are sending it to the factory, it will be added to factory overhead cost. And how much is the amount? 4,000 rupees is the amount. I will be preparing one more account, which is a factory overhead production, factory overhead or production overhead control account. It is termed, let us speak it short, factory overhead control account. It will be coming on debit side to raw material control account. This raw materials are issued for say maintenance, for some servicing. These are indirect raw material issued to production. So they directly don't go into WIP. They will indirectly go into WIP, but they directly does not go into WIP. So this 4,000 is coming over here. This is 4,000. Which account is tallied? Raw material or stores control account is tallied. Debit what comes in when we are purchasing it, opening stock will be on debit side. Credit what goes out when we return the material to supplier. it is on credit side. When we issue directly to production, it will go in WIP account. When we issue indirectly to production, it will go in factory overhead control account. And my raw material or stores control account is tallied. Let me go to another account, which is nothing but wages control account. First, I will incur the wages to cash. No, I am not preparing cash account. Which temporary account I will be preparing? General ledger adjustment account. So I will be writing to general ledger adjustment account. Sir, there are n numbers of entries in general ledger adjustment account. We have not prepared general ledger adjustment account. Yes, we have prepared, but we have just not written it. Let me write it down. GLA 10,000 is debit. So GLA 10,000 will be credit in GLA account. I have prepared GLA account by raw material control account. How much rupees? 10,000. Another GLA was credit side. So in GLA account, it will come on debit side, 2,000 rupees. In GLA account, debit side, to raw material control account, 2,000 rupees. And we are doing wages control account. There was no other point of GLA account. Now we are going to this wages account. We have paid wages to worker worth rupees 50,000 in current year. So we will not pass journal entry wages account debit to cash. We will pass journal entry wages account debit to GLA account. So what will be GLA account will be credit side by wages. It will be by wages, which was 50,000 rupees. And wages control account is debited by 50,000 rupees. Do you understand? We will not credit cash, we will credit GLA account instead. Now, are they direct wages or indirect wages? Both wages are written in wages control account. So only it is termed as control account. First it records it, then it decides whether it is direct or indirect and will give it to proper places. If they are direct wages, let me take 40,000 rupees wages are direct wages. These are direct wages. How much? 40,000. If 40,000 are direct wages, it should be going to production. But understand, this wages will not directly create finished goods. They will go into WIP and ultimately it will result into finished goods. So this 40,000 will go in WIP. In WIP debit side, I will be writing down to wages control account. How many rupees? 40,000 rupees. So this goes over here. All the direct expenditure, prime cost. Say this is direct material, 6,000. This is direct wages, 40,000. This all are direct thing, will always directly go in WIP account. This is by WIP. Sir, what about 10,000? If they 40,000 are direct wages, 10,000 will be indirect wages. By it is indirect wages. How much rupees? 10,000. My wages control account is tallied. Sir, where this 10,000 will go? 10,000 will go in factory overhead. Indirect wages are overhead. Direct wages are directly related to production. Indirect wages are overhead not related to a particular product. It will go in factory overhead. Indirect wages. I will be writing down wages control account, not indirect wages. Wages control account. of how much? 10,000 rupees. So this portion, indirect wages, will directly go over here. Are you all getting it? Raw material and wages are cost account. Direct cost will go in WIP account and indirect cost will go in factory overhead. It is as simple as this. This was our second account, which is tallied, which is wages account. We are going to factory overhead account. In factory overhead account, we are already having two things: raw material control account 4,000 and two wages control account 10,000. What are this? They are indirect material cost, they are indirect wages cost. Indirect material and indirect wages are nothing but production overhead or factory overhead. I will be writing down other overheads also to whenever it is incurred, when the overhead is incurred, I will be passing a journal entry. See, I pay electricity bill, which is a factory overhead. Electricity bill of a factory. It is a factory overhead. I will pass a journal entry in my financial books of accounts, electricity account debit to cash. In cost books of accounts, I will be passing journal entry, factory overhead control account debit, not to cash, to general ledger adjustment account. And how much amount I have incurred? I have incurred 1 lakh rupees as other factory overhead, where it will go to GLA account. Because I am not having any cash account in my costing books of accounts, it will go in GLA account. GLA account, it will be written credit side. GLA account, it will be written credit side by factory overhead control account. How much rupees? There it was debited, here it will be credited. And we are going to factory overhead. Please try to concentrate. We are learning in detail as this is the base question. This is 1 lakh rupees. Is factory overhead absorbed or factory overhead incurred? It is a factory overhead incurred. You pass journal entry for electricity bill what? Electricity account debit to cash. It is actual figure which is incurred. Actual factory overhead which is incurred. But in costing, we don't go with the concept of incurred. We go with the concept of absorbed. We go with the concept of absorbed. How much factory overhead are absorbed by production? How much factory overhead is absorbed by production? We are going to write it down on credit side. By this is factory overhead absorbed. Now, how much is total factory overhead? Not 1 lakh, it is 1 lakh and 14,000. Why? 1 lakh is electricity bill, 10,000 is indirect wages, 4,000 is indirect material. So total factory overhead is 1 lakh and 14,000. Absorb. Sir, how we absorb the overhead? We have done 2 full chapters for it. Overhead and ABC. How we absorb, that is a different thing. But how much is absorbed is 1 lakh 4,000. Say we use a blanket rate. By blanket rate, overhead absorbed was only 1 lakh 4,000. If the overhead absorbed was 1 lakh 4,000, where it will go? Who has absorbed it? It is absorbed by production. If it is absorbed by production, and production means WIP. Production basically means WIP. So where this will go is WIP. What will be the journal entry passed? Journal entry passed is the WIP account debit to factory overhead control account. What is happening? We are absorbing or we are incurring? We are absorbing the overhead. Once again, WIP account debit to factory overhead control account. So WIP, it will come on debit side to factory overhead control account. It is how much? 1,04,000. And this will be always absorbed. This will always be absorbed. All right. What is the difference in factory overhead or production overhead control account? This was 1,14,000. This is 1,04,000. So difference is 10,000. Difference is 10,000. Out of which it is said in the question that factory overhead of 2,000 is to be carried forward for next month. So it is possible it was under absorbed. What is 10,000? Under absorption of overhead. It was under absorbed, which is going to be covered in next month. So I will be transferring it to next month, say 2,000 rupees. But let me in this case consider there is no carry forward. What is under absorption of overhead? Sir, it is under absorption. Yes. How much is incurred? 1,14,000. How much is absorbed? 1,04,000. What is under absorption of overhead? 10,000. Go to overhead chapter. If there is under absorption of overhead, you will have to see whether it is normal or whether it is abnormal. I am telling you 6,000 is abnormal. By this is abnormal. If 6,000 is abnormal, where abnormal under absorption of overhead will go? It will go in costing P&L account. And it is how much? 6,000. Sir, are you having costing P&L account? Yes. There is a costing P&L account and it will be written on debit side. There it is written on credit side. Here it will be written on debit side to factory overhead abnormal under absorption. And it is how much? 6,000 rupees. So this is, I'm just making it small for some time. There is this 6,000 rupees will directly come over here. We have learned it, right? Normal and abnormal. Abnormal is directly transferred to costing P&L account. But if it is normal, we are going to normal. Factory overhead. What is the balancing figure? Balancing figure is normal, which is 4,000. Where normal absorption or under absorption of overhead is transferred, it is transferred to WIP, it is transferred to finished goods, it is transferred to cost of sales. In which ratio? In number of equivalent units. In WIP, we also convert it into equivalent units. Here we are distributing just by numbers. 2,000 we have transferred to WIP. 2,000 rupees we have transferred to WIP. 1,000 we have transferred to finished goods. And 1,000 we are transferring it to cost of sales. So this is what we have already learned. Under absorption of overhead, abnormal is transferred to costing P&L account. Normal is transferred to finished goods. It is transferred to WIP and it is transferred to cost of sales. How much is transferred to WIP? Is 2,000. So 2,000 WIP will be debited to factory overhead under absorption 2,000 Then 1000 will be transferred to finished goods. This is finished goods control account. To factory overhead under absorption 1000 rupees. And 1000 rupees will be transferred to cost of sales. To factory overhead under absorption 1000 rupees. So technically, where we have transferred under absorption of overhead, try to concentrate. We have transferred 2000 to WIP. We have transferred 2000 to WIP, 1000 to finished goods, and 1000 rupees to cost of sales. If you don't understand this, go to overhead chapter and understand under absorption of overhead. Two parts: abnormal directly transferred to costing P&L account. This 6000 rupees we have transferred to costing P&L account, and others normal will be transferred to cost of sales, finished goods, and WIP, and we have transferred it in that manner. And hereby we finish factory overhead or production overhead control account. We are going to administrative overhead control account. Administrative overhead control account. Again, same points will be repeated. Administrative overhead control account to cash. Whenever the administrative overhead is incurred, it is to cash. We don't prepare cash account, so we will just write down to general ledger adjustment account. And how much is factory overhead is 60,000 rupees. Where I will be transferring? I will be transferring this to general ledger adjustment account. It is by administrative overhead. Administrative overhead is nothing but 60,000. Same manner, where administrative overhead is absorbed, this also we have learned it in cost sheet. If administrative overhead is related to production, it should be absorbed by WIP, that is cost of production. If administrative overhead is related to production, then it should be absorbed by cost of production. So to GLA account, I am writing down 40,000 rupees administrative overhead are related to production. I am writing in bracket, it is related to production. If they are related to production, where it will be transferred? It will be transferred in WIP. If I transfer it into WIP account, here is my WIP account. How much I need to transfer is 40,000 to administrative overhead, 40,000 rupees. What is the journal entry that will be passed? WIP account debit to administrative overhead, because this administrative overhead were related to production. We have also understood the name of this type of administrative overhead, right? Quality checking, maintenance, these are or staff for maintenance, you are paying them salary. Their administrative overhead related to production should be debited to WIP. There are administrative overhead not related to production. It will be not related to production is transferred to finished goods control account. Which is nothing but So administrative overhead not related to production is 20,000 and total administrative overhead is absorbed, which is 60,000. Sir, if there is under absorption in administrative overhead, then you may transfer it to finished goods account or cost of sales account. Normally it is transferred to finished goods account or cost of sales account. But 20,000 rupees are for production. I will not be not related to production. I will not be transferring it to WIP, but I will be transferring it to finished goods control account, to administrative overhead absorbed, which is 20,000. I am once again repeating administrative overhead control account. On debit side, what was incurred? On credit side, whatever is absorbed. If it is absorbed by production, if they are administrative overhead related to production, it will go in WIP. If it is not related to production, it will go in finished goods. This is nothing but administrative overhead. We are going to selling and distribution overhead. Next is selling and distribution overhead. Again, same thing. Selling and distribution overhead incurred. To cash? No. To general ledger adjustment account. Say it is 70,000 rupees. In general ledger adjustment account, it will be credit side 70,000 rupees by selling overhead control account, which is 70,000. All right, let me take under absorption even in selling and distribution overhead. Selling and distribution overhead will be transferred to cost of sales. It is never transferred to even finished goods. Finished goods is nothing but how much production cost you have totally incurred. This will be directly transferred to cost of sales. So whatever is absorbed, how much is absorbed? See, this is incurred and this will be absorbed. And where it will be absorbed? It will be absorbed by cost of sales. It is absorbed by cost of sales and it is how much? 60,000 rupees. Cost of sales is over here. It will be written debit. Selling and distribution overhead will be nothing but 60,000 rupees. And it will always write down a costing, always write down absorb. As it is incurred, we are writing it on debit side. Whatever is absorbed will be absorbed by production, sales, and in profit and loss account, ultimately that figure will go. Now, what is under absorption of selling and distribution overhead? Please understand, if there is under absorption of production overhead, our concept is very much clear. If it is abnormal, we transfer it to costing P&L account. If it is normal, we divide it into WIP, finished goods and cost of sales. But if it is selling and distribution overhead, selling and distribution does not go into WIP and finished goods. So selling and distribution overhead under absorbed, you can directly transfer it to costing and P&L account. And normally when there is under absorption of selling and distribution overhead, it will always be transferred as abnormal to costing and P&L account. By under absorption, costing and P&L account, which is nothing but, it is not transferred to WIP or finished goods. Selling and distribution overhead is not absorbed by WIP and finished goods, so it will be directly transferred to costing P&L account. I will be directly writing down in costing P&L account debit side. It will be to selling and distribution overhead. It is under absorbed. and the amount was 10,000. Which account I have completed? Selling and distribution overhead control account. Debit side, whatever is incurred, what is incurred in our case? 70,000. So selling and distribution account debit to cash. No, because we don't prepare cash account. Selling and distribution account debit to general ledger adjustment account. And on credit side, whatever is absorbed by cost of sales will be written on credit side. Whatever is under absorption will be directly transferred to costing P&L account. We will not be transferring it to WIP or finished stock account, nor even to cost of sales account. Will be directly transferring it to costing P&L account. This is five accounts we have done: raw material control account, wage control account, factory overhead, administrative overhead, and selling and distribution overhead. Meanwhile, we have prepared WIP control account. Please understand, this account is also nothing but a WIP stock account. Whenever stock increases, it will be written on debit side. Whenever the value of stock increases, it will be written on debit side. Whenever stock decreases, it will be written on credit side. Now try to understand. Let me change the color even. In WIP, there was already an opening stock of 20,000 rupees. There was already WIP opening stock of 20,000 rupees. So what is the total cost of WIP? In our case is 20,000, 6,000, 40,000, 1,04,000, 2,000 and 40,000. This is a total cost of WIP as far as our case is concerned. And what is the total? I am just finding it out. It is 20,000 plus 6,000 plus 40,000 plus 1,04,000 plus 2,000 plus 40,000, which is nothing but 2,12,000. Total is nothing but 2,12,000. Out of which, how much finished goods are manufactured? Because WIP, what is the work of WIP? It will take in raw material, it will convert it into finished goods. How much finished goods are manufactured? Whatever finished goods are manufactured, they no longer remains WIP. Now they are not WIP. They are finished goods now. So finished goods which are manufactured is of 2 lakhs rupees. Where this 2 lakhs rupees will go? First try to understand the debit side, then we'll be going to credit side. What is debit side? There was an opening WIP of 20,000. There was a direct raw material of 6,000, which increases the cost of WIP. There is direct wages of 40,000, which will increase the cost of WIP. There is a factory overhead absorbed of 1,04,000, which will increase the cost of your goods which are in process. There is a factory overhead under absorption of overhead. Because of normal reasons, you have got 2,000 rupees extra. Whenever it is a normal reason, we have understood this. Whenever under absorption or any loss is because of normal reason, it increases the cost of production. See, this 2,000 rupees is increasing the cost of production. And administrative overhead related to production, which is absorbed by WIP, is 40,000. So total cost comes to 2,12,000. Out of which we have manufactured finished goods of 2 lakhs rupees. And it is very obvious where it will go. 2 lakhs rupees will go in finished goods control account. Finished goods issued to, or WIP converted finished goods is 2 lakhs rupees. It will go in finished goods control account debit side. It will be returned to WIP, which will be finished goods transfer, and it is how much rupees? 2 lakhs. We are still in WIP account. This is WIP control account. Our WIP control account is tallied? No, there is a difference of 12,000 rupees. And if 2,14,000 is total cost, if 2 lakhs rupees are finished goods, that means that 12,000 rupees is nothing but closing stock of WIP. How much is closing stock of WIP is 12,000 rupees. This is nothing but closing stock of WIP, which is 12,000 rupees. My WIP control account will be absolutely tallied. I am going to next account, which is finished goods control account. There was under absorption of 1,000. Because of normal reason, finished goods will bear that cost. Administrative overhead absorbed, because they were not directly related to production, it will be absorbed by finished goods, which is 20,000. And finished goods manufactured by WIP, that is nothing but cost of finished goods, which is 2 lakhs rupees. And even there is an opening stock of finished goods of say 10,000 rupees. So finished goods debit side will comprises of opening stock, factory overhead which are under absorbed because of normal reason. If they are abnormal reason, it will go to costing P&L account, but if it is normal reason, it is divided into WIP finished goods and cost of sales. What is the total of this? 2,31,000. So it is 2,31,000. Where finished goods will go? Please understand, 2,10,000. The cost of 2,10,000 goods were sold. So it will be transferred to cost of sales by cost of sales. This is COGS. It is not sales value. It is cost of goods which are sold. And it was how much? 2,10,000. So what will be cost of goods lying in go down? 21,000, because total is 2,31,000. This will be closing stock of finished goods. This is nothing but closing stock of finished goods. We had taken in raw material also opening stock and closing stock. Yes. My finished goods account is absolutely dead. But whatever is transferred to cost of sales, I should transfer it to cost of sales, which is 2,10,000 rupees to finished goods control account. What is the total cost of sales? Please try to understand. WIP has transferred the cost to finished goods. Finished goods has transferred cost to cost of sales, which is 2,10,000 rupees. Selling and distribution overhead absorbed are 60,000 because it is absorbed directly by cost of sales. And factory overhead under absorbed, we have understood. If there is under absorption because of normal reason, it will be distributed to cost of sales. A portion of it will be distributed to cost of sales. So this is 2,71,000. Total is 2,71,000, which is nothing but cost of sales. Where this 2,71,000 will be transferred? This will be transferred to costing P&L. 2 lakh transferred to costing P&L account, which will be 2,71,000. So in costing P&L account, it will come on debit side. 2,70,000 to cost of sales. We are talking something about sales account. When you sell goods on credit or you sell goods on cash, both will be having only one journal entry. Sales goods goes out. What is the normal effect of sales? It is credited. Cash account debit to sales or debtors account debit to sales. Instead of that, I will be passing the journal entry GLA account debit to sales, and it is the 5 lakhs rupees by GLA, which is 5 lakhs rupees. GLA debit side to sales account 5 lakhs rupees. Where sales account should be transferred? Sales account should be also transferred to costing P&L account, which is nothing but ₹5 lakhs. Sales will come over here, which is nothing but 5 lakhs rupees. What is the journal entry? Sales account debit to costing P&L account, where sales will be transferred to costing P&L account. We have got costing P&L account. We are solving costing P&L account. 5 lakh minus 2,71,000 minus 10,000 minus 6,000. This will be nothing but costing P&L. Profit and loss determined by cost accounting system, which will be 5 lakhs minus 6,000 minus 10,000 minus 2,71,000, which is 2,13,000. Where it will go? Because we don't prepare balance sheet. If we don't prepare balance sheet, it should go somewhere. Where it will go is nothing but general ledger adjustment account. What is the journal entry which is passed? Costing P&L account debit to GLA. So in GLA, it will be written on credit side, which is nothing but by costing P&L. What was the figure? Figure was 2,13,000. And this account will tell you, which is nothing but costing P&L account. Last account pending is general ledger adjustment account. Please understand, here we have not taken opening balance of general ledger adjustment account. Whatever is the opening balance of general ledger adjustment account, it will be normally on credit side by opening balance. I am not taking actual opening balance, and balancing figure will be nothing but closing balance of general ledger adjustment account. And this is how my general ledger adjustment account will tally. And this will be end of my non-integrated cost accounting. Which all accounts I will prepare? Please understand which all accounts I will prepare. I will be starting with raw material stores or control account, wage control account. Direct raw material, I will be transferring it to WIP. Indirect, I will be transferring it to factory overhead. Wages, direct wages, I will be transferring it to WIP. Indirect wages, I will be transferring it to factory overhead. I will be also preparing factory overhead account. Factory overhead will be absorbed by WIP. Whatever is under absorption If it is because of abnormal reason, it will go to costing P&L account. If it is because of normal reason, it will go to WIP, finished goods and cost of sales account. We will be preparing administrative overhead account. It will be absorbed if it is directly related to production by WIP. If it is indirectly or not directly related to production, it will be absorbed by finished goods account. Selling and distribution account is absorbed always by cost of sales. If there is under absorption in selling and distribution, it will be directly transferred to costing P&L account. Then we went to this WIP control account. What we did in WIP control account? Our raw material were taken in, all the costs were taken by WIP, and it manufactured finished goods of rupees 2 lakhs. 2 lakhs rupees were transferred to finished goods account, and remaining 12,000 is nothing but closing stock of WIP. Then we will be preparing finished stock account. Finished stock account will be having its own expenditure. There might be some under absorption which are normal. Administrative overhead absorbed which is not related to production is directly absorbed by finished goods account. Opening stock on debit side, and whatever cost WIP has transferred is on debit side, which is 2 lakhs. Finished goods account again is a stock account. Debit what comes in or increase the value of the stock. Credit what goes out or decreases the value of the stock. You have sold goods costing rupees 2 lakh 10,000, so it will be transferred to cost of sales, and closing stock of finished goods is 21,000. Then we went to cost of sales. Before that, we did sales account. Sales account again, whatever is sold will be written on credit side and debit will be GLA. The balancing figure of the sales account, which will be normally the total figure, will be transferred to costing P&L account. So costing P&L account, credit side will be having sales, debit side will be having cost of sales. Thus cost of sales. This was transferred from finished goods control account. There was a cost of sales already there. There is some under absorption of overhead which is because of normal reason. Selling and distribution is directly absorbed by cost of sales. This was cost of sales account, and it was also transferred to costing P&L account, and we ultimately got answer of costing P&L, which is 2,13,000 rupees. We have not prepared cash account. We have not prepared debtors account. We have not prepared creditors account. These accounts are prepared. We have not prepared trial balance, trading account, profit and loss account, balance sheet. These are prepared by financial books of accounts. Cost accountant just prepare this many books of accounts to find out its cost of sales, to find out closing stock of WIP, closing stock of finished goods, closing stock of how much units or how much cost of goods you have sold. This all can be found out by costing accounting system, and this is non-integrated accounting system. Let me write down, because it was not much visible in that case. Let me write down which all accounts we prepared. We prepared raw material control. We prepared wages control, factory overhead, administrative overhead, selling and distribution overhead, WIP, finished goods, cost of sales. We prepared even sales account, and we prepare costing. And of course, there was one account that we prepared was general ledger adjustment account. What we'll be doing is, we'll be solving one question of non-integrated costing system. We will be drawing all books of accounts, relevant books of accounts, and we'll be solving full-fledged, and then we will be learning journal entries for non-integrated books of accounts. So let us solve this one question, C6.1. First I am reading the question, and then I'll decide which all accounts I'll be preparing. On 31st March, the following balances were extracted from the books of Supreme Manufacturing Company. Stores ledger control account 35,000. This is opening balance. WIP control account 38,000. Finished goods control account 25,000. Cost ledger control account, which is nothing but general ledger adjustment account. The name is different, otherwise the concept is same. It is a temporary account which is just prepared because we don't prepare debtors, creditors, cash and other financial books of accounts, which is 98,000. These all are tallied. We will be using concept of our books of accounts. If it is a tallied sheet, I will be giving one effect. If it is untallied figure, I will be giving dual effect. These all are untallied, so we will be giving two effects for it. Raw material purchased, returned to suppliers, issued to production, returned to stores. Productive wages 40,000, 25,000. Factory overhead expense incurred 50,000. Selling and administrative expenses incurred. Cost of finished goods transferred to warehouse. Cost of goods sold. Sales. Factory overhead are applied to production at 150% of direct wages. Any under or over absorbed overhead being carried forward for adjustment in subsequent months. So you don't have to give effect of under absorption and over absorption of overhead. It should be carried forward to subsequent months. All administrative and selling expenses are treated as a period cost. Administrative and selling expenses are treated as period cost and are charged off to P&L account of the month in which they are incurred. So there will be no under absorption, over absorption. Show the following accounts. Cost ledger control account, which is nothing but general ledger adjustment account. Work in progress control account. Factory overhead control account. Stores ledger control account. Finished goods account. Costing P&L account. Trial balance as at 30th April. This was as on 31st March. And we need to prepare as on 30th April. So the question is of 1 month and we need to prepare non-integrated books of accounts for the period of 1 month. So I have prepared all books of accounts. Now what I will be doing is I will be transferring first this trial balance to my ledger accounts. They will become opening balance for my period. So stores ledger control account is nothing but opening raw material. It were closing raw material as on 31st March. So it is opening raw material as on 1st April. Stores ledger control account debit side 35,000 to opening balance 35,000. One effect because it is a tallied sheet. We have understood this in accountancy. Tallied figure I will be giving one effect. Other all figures I will be giving dual effect. Work in progress is nothing but opening WIP. Opening WIP is 38,000. Finished goods control account is nothing but opening finished goods, which is 25,000. So in finished goods account, opening will be 25,000. Cost ledger control account is nothing but GLA account. GLA account credit balance is 98,000 by opening 90,000. For any other figures, I will have to give dual effect. So for any figures I am taking from here, I will have to give two effect. Raw material purchased 95,000. What will be journal entry? Stores ledger control account or raw material control account to cash. No, to GLA account. It is 95,000. So it is stores ledger control account debit to GLA. In bracket you can write down it is purchased, which is 95,000. In GLA account it will be credit side 95,000. By stores control account 90. I'll normally tick mark it when I have done it. Return to suppliers. What is the journal entry? Creditors account a debit to raw material? No. GLA account a debit to stores control account 3000. See, you should be logically also clear. If you return raw material to supplier, your raw material stock will decrease. So in stores control account, it will always return on credit side. Debit what comes in, credit what goes out. This is going out 3000. GLA account debit side to stores control account 3000. Material issued to production. These are direct materials which are issued to production. What will be the journal entry? WIP account debit, because if materials are issued to production, it will go in WIP, so I am debiting it. It will go out from raw materials, so I am crediting it. I will credit raw material or stores ledger adjustment account by 98,000 by WIP. You can write down it is issued to production, which is 98,000. WIP, this raw materials are coming in. It is cost for WIP, so it will be written on debit side 98,000. Raw material control, which is 98,000. Next is raw material returned to stores. What does this mean? The raw material were issued to production. Now production is giving back this raw material to raw material department. Why? Because they might not be usable, they might be excess in stock, they might not be having storage space, anything might be the reason. But they are returning raw material to the stores department. So it will come in raw material stores department. So it should be written on debit side. Written from stores. What is the figure? 3,000 rupees. See, logically also it should be clear. We are drawing stores control account. It is raw material stock account. Stock is coming in. From where? Production is sending back this raw material to stores department. And so, who will be credited is WIP. Stores ledger control account debit to WIP. These raw materials are not written to suppliers. They were issued to production. Because of some reason, production has given it back to raw material stores department. Productive wages. Productive wages is incurred. So when it is incurred, what journal entry you pass? Wages account debit to GLA, not cash. Wages account debit to GLA, 40,000. Wages account debit to GLA, 40,000. And we know they are direct wages. It is written, it is productive wages, so they are direct wages. We are knowing it. GLA account will be credited by 40,000 by wage control account, 40,000. Indirect labor is 25,000, which is incurred. Again, I'll be passing same journal entry. Wages account debit to GLA, because they are incurred. I will not be passing the journal entry wages to cash, but wages to GLA, 25,000. Wages account debit to GLA, but they are indirect. 25,000. What is the journal entry passed? Wages account debit to GLA. GLA will be credited by 25,000 by wages control account 20. Factory overhead expense incurred. Factory overhead control account to GLA. We never write down cash. Factory overhead expense account debit to GLA. 50,000. They are incurred or absorbed? They are incurred. So only it is written on debit side. Absorbed is written on credit side. These are incurred. And GLA will be credited by 50,000 by factory overhead. Selling and administrative expenses 40,000. So please understand, I need not draw administrative and selling and distribution overhead separately. I can draw it in one. Administrative and selling overhead, because they have given the combined figure, which is 40,000 to GLA, 40,000 rupees. GLA account credit by selling and distribution. This is one of the most important and somewhat difficult. Cost of finished goods transferred to warehouse. Cost of finished goods which are transferred to warehouse. Believe me, this is not finished goods which are transferred to cost of sales. These are finished goods which were manufactured in WIP, which are now transferred to your finished goods warehouse. Please try to understand. Even I am changing the color where I am writing it down, this 2,13,000 rupees. From WIP it will go out by transferred to finished goods. These are cost of finished goods manufactured, which is 2,13,000. Where it is transferred to warehouse, and warehouse is nothing but finished goods account. To WIP account 2,13,000. This will be the journal entries. What is the journal entry? Finished goods control account debit to WIP. What you have done? Whatever finished goods were manufactured in WIP department will be transferred to warehouse, which is a finished goods department. So this was a good point. 2,13,000. See, normally people write down this on credit side of finished goods. Why? Because they think it is finished goods are transferred. Yes, but finished goods are transferred by whom? They are transferred by WIP to finished goods. Finished goods are transferred whatever is sold to cost of sales. It does not transfer cost of finished goods. It transfers cost of sales. Cost of goods sold is 2,10,000. Now this I can write it down. Cost of goods sold is 2,10,000. Where it will be transferred? It will be transferred in cost of sales. Cost of goods sold will be transferred to cost of sales. What is this? Please try to understand. The finished goods which are not now in warehouse. What is this? Finished goods stock account. Finished goods stock account is nothing but warehouse of finished goods. Cost of goods sold are goods going out of the finished goods and coming in cost of sales. That is sales department, which is nothing but 2,10,000 will be debited to cost of sales. Sir, cost of goods sold goes out in finished goods department. Yes, they are issued to sales department, which is 2,10,000. Sales is 3 lakhs by GLA 3 lakhs rupees. GLA account debit to sales. GLA debit side 3 lakhs. To sales account 3 lakhs. Alright. Factory overhead are applied to production at 150% of direct wages. So how much factory overhead will be absorbed? What is the blanket rate? 150% of direct wages. So what are my direct wages? 40,000. 40,000 into 150% will be 60,000. 60,000 rupees is overhead absorbed, factory overhead absorbed by production. So 60,000 rupees is absorbed by production. Who is production in our case? Who is producing the goods? WIP is producing the goods. Once the goods are produced, they transfer it to finished goods department. WIP 60,000 and WIP it will be written on debit side 60,000. What is this? Factory overhead. Incurred? No. Incurred is 50,000. Absorbed is 60,000. It is absorbed. So we have done this. Any under or over absorbed overhead, we will not be giving treatment, but we will just carry it forward to subsequent month. All administrative and selling expenses are treated as a period cost and charge off to P&L account. So whatever is incurred, that will be absorbed. There is no under absorption and over absorption. P&L account for the month in which they are incurred. Prepare this all accounts. We are already preparing this all accounts. Now, in cost accounting system, it will be somewhat easy because you will have to go one by one accounts. It will not be like single entry system in accountancy where you will first have to tally some other account and then come back to, you can go sequence wise. So I am going to stores ledger control account. Opening is given, issued to production is given, returned from production is returned from production is given. This is purchase is given. Sorry, opening is given, purchase is given, returned from production is given, issued to production is given, returned to supplier is given. What will be the closing? Sir, can't it be indirect raw material issued to stores? No. A good idea is to keep it as a closing stock. See, if there are some indirect materials which are to be transferred to factory overhead, they might have told you that these are the indirect material which were absorbed by overhead. In absence of information, this should be taken as a closing stock of raw material, which will be nothing but 35,000 plus 95,000 plus 3,000 minus 3,000 minus 98,000, which is 32,000. Never give one effect. When you are writing down accountancy, you will have to give two effects. Where second effect will go, it will directly go into trial balance. It is a balance, so it will go in trial balance. Debit side 32,000. And this is nothing but a stock of raw material. You can also write down stores ledger control account. It is one and the same. I have tallied my stores ledger control account. Let me go to wages. Please understand, normally wages go into WIP if they are direct. If they are indirect, they will go into factory overhead. So direct wages, I will be transferring it to WIP. 40,000. So WIP will be debited by 40,000, which is nothing by wages control account, which are direct wages. and indirect wages will be transferred to factory overhead, which is 25,000. It is clearly given they are indirect. So factory overhead will be debited by wages which are indirect, which is 20. I have tallied wage control account. Let me tell you factory overhead account. How I will tell you. What is the factory overhead first? Incurred we have 50,000. There were indirect wages of 25,000. So total incurred is 75,000. Out of which 60,000 are absorbed. So under absorption is 15,000. Sir, it is abnormal, normal, we don't know. It is advisable to transfer it into next month. That is directly written. Forward adjustment in the subsequent month. Any under and over absorption will be carried forward in adjustment to subsequent month. Why it is logical? Understand. You are not preparing this books of accounts for 1 year. You are preparing it for 1 month. In current month it is under absorbed. It is possible in next month it will be over absorbed. So you need to take it in next month. So what is under absorption of overhead? 15,000 will be balance carried down. You cannot pass one effect in accountancy. Where the second effect will go, it will go in trial balance. 15,000 rupees factory overhead carry forward. Where it will go in next month, that is in the month of May, it will go on debit side of factory overhead account, saying it was under absorbed in previous month, which is 15,000. We have tallied factory overhead also. Administrative overhead is 40,000 and they have told that current month overhead should be absorbed in current month. So there is no under absorption, over absorption. Also, I will not be treating it as a part of production. So I will be transferring it to finished goods account, which is 40,000. Finished goods account debit side, 40,000, which is nothing but selling and distribution. Selling and distribution overhead are not a part of cost of production. They are part of cost of sales. Remember cost sheet. What we do? Cost of production plus opening stock minus closing stock will be nothing but cost of goods sold, plus administrative and selling overhead will be nothing but cost of sales. So this is incorrect. Selling and distribution overhead are not transferred to finished goods. They are transferred to cost of sales. At what rate? 40,000. It will be cost of sales. 40,000. It is selling and distribution. So this is the mistake I have done even in my Excel sheet. So when I was doing selling and distribution overhead, yes, I have transferred it to cost of sales. So in Excel sheet, I have not made any mistake. We have just made mistake over here. So it is cost of sales, selling and distribution overhead, 40,000. Have I given two effects? Yes. Administrative overhead and selling and distribution overhead are also tallied. Let us go to WIP account. Opening is given, direct raw material which are absorbed by WIP, factory overhead absorbed by WIP, wages which are direct, raw material which are returned we have credited, transferred to finished goods. So WIP which was converted into finished goods, we have transferred it to finished goods. Balance should be closing WIP. What will be closing WIP? 38,000 plus 98,000 plus 60,000 plus 40,000 minus 3,000 minus 2,13,000 which is 20,000. I never give one effect. Second effect will go in trial balance. WIP stock is 20,000. I have closed my WIP account. Opening stock of finished goods was 25,000. WIP is 2,13,000. Cost of sales is 2,10,000. So these are cost of goods sold which is transferred to cost of sales account. Balancing figure will be closing stock of finished goods. It is 2,38,000 minus 2,10,000 will be 28,000. I don't pass one effect. 28,000 is nothing but finished goods stocks. Sales account will be transferred to costing P&L account. Which is 3 lakhs rupees. Costing P&L account will be credited by 3 lakhs. 3 lakhs. Cost of sales 2,50,000 will be also transferred to costing P&L account, which is 2,50,000. How it is 2,50,000? Selling and distribution overhead 40,000 and cost of goods sold is 2,10,000. COGS plus selling and distribution overhead. You can see your cost sheet. COGS plus selling and distribution overhead will be cost of sales. 2,50,000 is nothing but cost of sales transferred to costing P&L account. 2,50,000 is nothing but cost of sales which is transferred to costing. What is profit? 50,000 by in bracket profit, which is 50,000, which will be transferred to general ledger adjustment account. Here we are not preparing any capital account where it will be transferred. So it will be transferred on credit side by costing P&L, which is nothing but. So even my costing P&L account has tallied. Now I need to find out balance of GLA. Normally it should be on credit side. Let me find out. 98,000 plus 95,000 plus 40,000 plus 25,000 plus 50,000 plus 40,000 plus 50,000 minus 3,000 minus 300,000, which is 95,000 is nothing but closing balance. My general ledger adjustment account is also tallied. GLA. This balance, I need not give one effect, I need to give two effects. 95,000. And if all the effects are correct, this should tally. 32,000 plus 15,000 plus 20,000 plus 28,000, which is 95,000. So this is 95,000. This is 95,000. So current month's costing books of accounts are tallied. Next month again we will be preparing all these accounts, will be carried forward the balance, and will be preparing same types of books of accounts. This is non-integrated method. Why non-integrated method? We are not combining financial books of accounts with this. What we are doing is we are preparing a separate books of accounts only for costing purpose. So they are termed as non-integrated books of account. Sometimes even an accountant who is preparing costing books of accounts is different. He prepares this type of account only. He is not responsible to prepare trading account, profit and loss account and balance sheet. He prepares only this type of accounts. What we'll be doing next is we are again in non-integrated system. We will be writing down situation or transaction, and we will be passing journal entries. Sir, it is required. Yes, absolutely. Sometimes they will directly ask the journal entries. They will not tell you to prepare directly ledger accounts. They will tell you to only pass journal entries. So it is required. Let us write down one by one all the situations and pass the journal entries. Number one is purchase of raw material. What will be journal entry if you purchase the raw material? Raw material control account, which is also termed as the stores control account. So I'm not writing down stores control account. Stores control account and raw material control account is one and the same. 2. General ledger adjustment account. Raw materials are coming in, so raw materials control account will be debited. Number 2 is return of raw material to suppliers. It will be reverse journal entry. Your raw material are decreasing, so to raw material control account, and GLA will be debited because you are not preparing your creditors account. Third is good. Materials directly issued to production. Let me not write down issued. Purchased by production without routing it through raw material control account. Materials directly purchased by production without routing it through raw material control account. See what happened is, say Mr. X was manager of raw material control account. Raw material control account, X was manager, and production, Y was manager. Some emergency raw materials were required in production. So what Y did, he purchased raw material from market. So raw material never came in raw material stores account. It was directly issued, directly purchased by production department. What journal entry I will pass? Of course, I cannot debit raw materials to raw material control account. This raw material are directly taken by production. So WIP control account debit to cash? No, to GLA. So if they have not routed it through raw material control account, we are also not routing it through raw material control account. We are directly, this raw material are used by production, so ultimately it will go in WIP. We are directly debiting WIP control account to GL. And we have done this in previous question itself. Return to stores by production. So raw material were issued to production. Now it is returned by stores to production. Then it will be raw material control account to WIP. Okay, we did return to stores, but we have not done issued to production. Let us do in fifth situation. Issued to production. Raw material issued to production. It is a WIP control account debit to raw material control account. Raw material issued to production, WIP stock will increase, raw material stock will decrease. Raw material issued to factory for, say, maintenance. Now I cannot debit WIP account because ultimately it is not a direct expenditure, it is overhead. So factory overhead control account to raw material control and a good point again. Normal loss of raw material. See, any normal loss should be absorbed by production, but a normal loss of raw material is overhead. So factory overhead control account to raw material control account. Sir, if it was abnormal, then I would have debited costing P&L account to raw material control account. See, raw material control account is a stock account. You will have to credit it because there is a loss. Abnormal loss, let us even write this down. Abnormal loss of raw material should be transferred to costing P&L account to raw material. See, normally this will not happen. Why this will not happen? Because if there is an abnormal loss in raw material control account, it will be absorbed by good raw materials produced. So the raw material price will be automatically inflated and this journal entry will not normally be required. But if sometimes they want to ask some difficult question, they can ask this. 9. Wages incurred. It is wages control account to GLA because we are not preparing cash account. Direct, indirect, anything which is incurred, same journal entry, it is passed. direct wages will be absorbed by production. Who will absorb direct wages? WIP account debit to wages control account. And who will absorb indirect wages? Indirect wages absorbed. Indirect wages are factory overhead. So it will be absorbed by factory overhead account debit to indirect wages, wages control account. After raw material wages, we can go to overhead. Factory overhead incurred. It is a factory overhead control account debit to GLA because we cannot credit cash. Factory overhead absorbed by production, by some blanket rate, by ABC, by anything, but for whatever is absorbed by production, the journal entry will be WIP cost will increase and factory overhead cost will be credited because it is transferred to WIP. Now it is actually absorbed by production. 14th one. Under absorption of factory overhead. If it is because of normal reason. See, under absorption will be written on credit side, that we have done. Under absorption, if not written on credit side, it will not tell you. So factory overhead is credited. If it is because of normal reason, who will take the cost? Three accounts will take the cost. WIP account, finished goods account, and cost of sales. Please understand this concept. We have done it in overhead. It is not a new concept. This we have already done it in overhead. And if it is because of abnormal reason, it is directly transferred to costing P&L account to factory. You can write down. Sometimes it's also carried forward. Like in previous example, we have not done anything of under absorption. We just carried it forward. Good point. Over absorption of overhead. If factory overhead are absorbed more, then factory overhead will be debited, believe me. then it depends what effect you are giving, because over absorption is also having 2 or 3 effects. What is one? Being a small amount, you can write it off to P&L account. For next year, you can carry it forward. Those are the 2 effects which you can give for over absorption of our overhead. So if you want to write it off in P&L account, it will be transferred to costing P&L account. Or you can even create a reserve, or you can carry it. 16th, administrative overhead incurred. It is administrative overhead control account debit to GLA. It is incurred and not absorbed. 17. Administrative overhead absorbed. Who absorbs administrative overhead? If it is directly related to production, it will be absorbed by WIP. WIP account debit to administrative overhead. If it is not related to production, administrative overhead will be absorbed by finished goods. Finished goods control account debit to administrative. 18. Under absorption of administrative again, if it is of normal reasons, you can transfer it to finished goods control account, cost of sales account to administrative. There is another view in this. Administrative overhead, if under absorbed, can be transferred to costing P&L account even if it is normal. Because administrative overhead under absorbed should be treated as an abnormal item. There is nowhere administrative overhead which are under absorbed. And this happens even if it is abnormal. You can learn it in this manner. If it is normal, it is transferred to finished goods control account, cost of sales account. Abnormal, it will be transferred to costing P&L. Over absorption remains same, right? Whatever effect you are giving for factory overhead over absorption, it remains same. 19. Selling and distribution overhead incurred. It is a selling and distribution overhead control account debit to GLA. selling and distribution overhead absorbed. It will be absorbed always by cost of sales. Now let us transfer and understand this particulars. All cost from WIP to finished goods or finished goods to cost of sales. Whatever goods of WIP are transferred to finished goods, that is cost of goods, and sometimes it is also written finished. Transferred from WIP to finished goods. What will be the journal entry? WIP will be credited, finished goods will be debited. Finished goods control account debit to general ledger adjustment. Cost of goods sold. Now see, WIP will transfer to finished goods whatever is manufactured. Finished goods will transfer to cost of sales whatever is sold, and cost of sales will be transferring all its cost to costing P&L account. So it will be like this: WIP will transfer to finished goods cost of production. Finished goods will transfer to cost of sales, COGS. COGS transferred from finished goods to cost of sales will be cost of sales account debit to finished goods control (23) Cost of sales transferred to costing P&L. Costing P&L account debit to cost of sales. Let us also do something about sales account. Whenever you sell the goods, what is the journal entry? GLA account debit to sales. Sales transferred to costing P&L. Will be sales account debit to costing P&L. (26) Profit of costing P&L will be transferred to costing P&L account debit. It will not be transferred to capital account, it will be transferred to GLA account. Sir, if there is loss, you should be intelligent enough to do this. GLA account debit to costing P&L. So we are not writing down a separate entry. If it is a loss, it will be a reverse journal entry. So if you are knowing some portion of costing like absorption costing, how to deal with under absorption, over absorption, and you know this 26 journal entries, you can always write down non-integrated books of costing accounting. We'll be first revising non-integrated system of cost accounting, and then we'll be continuing with some questions of non-integrated system of cost accounting. Sir, after this long non-integrated of cost accounting system, we'll be getting again integrated system of cost accounting. The answer is yes, but believe me, it is extremely easy if you know this non-integrated system. Integrated system will be just some of the adjustment in this non-integrated system. We start non-integrated system with raw material and stores. Try to understand it logically rather than to just mug it up. This is a stock account. This is a stock account. So it will be having opening stock. Can you tell me it will be at cost or at selling price? It will always be at cost, right? There will be no journal entries because last year closing stock of raw material will become opening stock of current year. Then there will be purchase. Raw material stores control account debit to GLA, right? Because we don't prepare cash account, we credit GLA. And all other returned materials will be written on credit side. So this will be net materials which are coming in, right? Where to use this material? Where the material is used, either it will remain in closing, which will become opening of next year, either it will be used in production. If it is used in production, please understand, this is where all production happens. WIP account is the place where all production happens. Why? When your goods are finished, what happens? They are transferred to finished goods account, right? When the goods are finished, it no longer remains WIP. So where all process happens, conversion of raw material into finished goods, WIP. So this is where all production happens. So all raw material which are in production will be transferred where? WIP. When it is transferred to the production department, I will be transferring it to WIP. Some of the materials are used for maintenance, services, other stores, which is not related to production. That will be transferred to production overhead. Agreed? Wages, very simple. To GLA, that is wages paid. Whether it is direct or indirect, I write it in wages control account. So only it is termed as control account. First it will write it, then it will control it and send it to appropriate place. To GLA, this is wages paid. If they are direct wages, direct wages means where it is used in production. So it will go to WIP. If they are direct wages, it will go to WIP. If they are indirect wages, then it is ultimately factory overhead, right? So this is indirect wages will go to factory. This is all cost accounts. Factory overhead. Some of the factory overhead may come from material and labor. All the indirect material and labor will come in factory overhead. There will be other factory overheads incurred like common electricity bill, common wages. There are n numbers of other things which will be overhead, which will be coming in factory overhead and which will be paid. Once it is paid, it is to GLA. Right? Factory overhead absorbed. Factory overhead absorbed. Please understand, here is where your production is happening. Factory overhead will always be absorbed by production. Alright. See, salary of accountant might not be absorbed by production, but factory overhead will always be absorbed by production. So it may be absorbed in any manner, but it will be absorbed. What is the meaning of absorbed? Out of this total cost, this cost is taken away by which department? WIP. Sir, why it can't be transferred to finished goods and why it can't be transferred to cost of sales? Your answer is going to remain same. The answer is yes. Ultimately, all cost we accumulate and we send it to cost of sales. Ultimately, costing P&L account, and ultimately we find out profit. So you cannot say that every cost should go to cost of sales. Why to prepare this all accounts? Otherwise, try to understand even this. What is this? Indirect wages of factory overhead. It is going where? Factory overhead. Factory overhead is ultimately going where? WIP. Why not to send this indirect factory overhead to WIP directly? It is ultimately going where? In WIP. If you think this, ultimately everything will be going over here. So there is no need to prepare this all accounts. We'll be going ahead, and when we'll come to this accounts, I'll tell you what is the importance of this account. Why we are preparing this particular accounts. So absorbed will go into WIP. If there is a shortfall, if there is under absorption of overhead. What is under absorption? If you have incurred 1 lakh rupees and because of your method of absorption, there are how many methods? We cannot count it, right? Based upon total material, based upon total wages, based upon prime cost, based upon factory cost, based upon n numbers of things that can be found out. And the last chapter that we learned was ABC. Don't distribute by one blanket rate. Distribute all the overhead by different rate. But the absorbed figure was how much? 80,000. Then there is an under absorption. If it is normal, it should be transferred. See if it is normal. If it is abnormal. If it is normal, it will be transferred at 3 places. One is WIP. Equivalent units of WIP will bear this cost. We know normal loss or normal cost is always absorbed by good units produced. WIP is good unit produced. They are half produced, but they are good units produced. Also, finished goods closing stock, also cost of sale. Why? Some of the goods on which this cost is incurred are already sold. So it cannot be given to finished goods closing stock. It cannot be given to WIP. And abnormal loss is transferred to costing P&L. Sometimes they will also tell you to carry forward the amount, right? Suppose in previous question we have done this. It was monthly accounts, books of accounts. So you don't under absorb and over absorb monthly. You under absorb and over absorb yearly, right? You take a treatment of, see, it is possible in this month there is under absorption. In next month it is over absorption. Next to next month again it is under absorption. You need to take a yearly figure and not a monthly figure. So sometimes even it is carry forward. The balance is carry forward. This is factory overhead. Most important is administrative overhead. It is incurred. Now administrative overhead are always of two types. It may be direct, it may be indirect. Direct means directly related to production. And we will be changing some things which we have not done before. Directly related to production, administrative overhead should be transferred where? It should be WIP. Is it alright? We have done also WIP. We will not be transferring it to WIP. We will be transferring it to finished goods account. Why WIP is not very wrong, I'll tell you, but I'll be transferring it to finished goods account. And if it is indirect, it goes in cost of. We need to change it. When we'll be doing journal entries for integrated, I will be changing this entries also. Administrative overhead absorbed, directly related to production should be transferred to finished goods, indirectly related should be transferred to cost of sales. And let me first complete selling and distribution, then I'll be coming to this again. Selling and distribution incurred to GLA. It is always transferred to cost of sales. It is always absorbed by cost of sales. Sir, if it is absorbed by some overhead absorption method, then under absorption will be transferred to costing P&L account, over absorption will be also transferred to costing P&L account. Normally, you absorb your factory overhead, not administrative and selling distribution overhead. So, this will be selling and distribution overhead. And most important is WIP. Your direct material might have come, direct wages might have come, opening stock might have come. Some might be transferred from factory overhead. Factory overhead absorbs comes over here, right? You might be also incurring other expenditures in your production directly. So this is GLA. All right. We transfer WIP. See what this is doing, this department is doing actually? Production. There were some stock which was not 100% completed in previous year, so they became my opening stock. All other directly or indirectly related production costs are coming to our department. What we will do? At the end of the year, we will manufacture the goods. So this is nothing but cost of finished goods manufactured, which will be transferred to which department? Finished goods department. So journal entry will be finished goods account debit to WIP, and this will be WIP. Whatever are not finished remains closing stock of WIP. Now let us go to that administrative overhead. This administrative overhead directly related to production. Should it come over here or not? It is directly related to production. Huh? What does it mean? Quality check expenditure, quality control officer salary, some maintenance. This all are or some guy who is doing maintenance and he is hired on a regular salary. What do you think it should come over here or not? See, always this all accounts are trading account. Huh? They are stock account. Stock account is like trading account. Every time logically we make mistake because we don't write down units. See, if the figures were in units, everything would be simple. Like WIP opening was 2000 units. This year I am processing on more 10,000 units. So total is 12,000 units. This will not increase the units. Wages working on say 12,000 chairs will not be increasing number of chairs, right? So wages will not increase number of units, but it will increase cost of the chair. This we have done in process account, right? Raw material increases number of units, but wages and overhead does not increases number of units. This will not increase number of units. This will not increase number of units. Why we are adding the cost to this? Try to understand. While transferring the cost to finished goods, this all cost should be considered. Agreed? Why we are not taking selling and distribution expense? It is not a production cost which should be transferred to finished goods department, right? So we are not adding selling and distribution over here. Now what do you feel about this? Administrative overhead related to production. See, two things will be valued with this all cost. Huh? Two things will be valued. One is transferred to finished goods. Another is closing stock of WIP. While valuing closing stock of WIP, should you consider quality checking cost? Answer is yes also and no also. So it is not absolutely incorrect if you keep it over here. But try to understand this, let it be factory. Sir, quality department manager is also in factory. Agreed. But I am trying to find out manufacturing cost except this indirect cost which are not related to directly production. So let me find out only factory cost. And so a good option is not to write down administrative overhead over here and to write down administrative overhead absorbed, which is direct over. Does it make any difference in our final costing P&L profit? No. Ultimately, this figure goes over here and this figure goes over there. So it does not make any difference where we add it, but you need to add it logically. All right. If I tell you the company's valuation of WIP is based upon quality control manager's salary, then it should be added in WIP, right? Then it should be added in WIP. Administrative overhead, which is indirect. This was a mistake that we have made. Administrative overhead, which is indirect, it is as good as selling and distribution overhead. Administrative overhead, which is indirect, is added. Remember your cost sheet. After COGS, administrative and selling overhead are added. So this should be transferred to cost of sales. There is no provision of transferring it to cost of production, that is in finished goods. So indirect factory administrative overhead in cost of sales and direct administrative overhead in finished goods. This is what we are summarizing. This is all factory cost. Factory ultimately will be transferring it to finished goods. Finished goods, there will be some other expenditures which will be ultimately transferred to cost of sales. Which is not transferred will remain my closing stock. What is this? Opening stock of finished goods, closing stock of finished goods, right? While valuing closing stock, understand this cost is already added, right? And it should be added. See your cost sheet. Administrative overhead related to production comes before that cost of production, right? We find out cost of production, it comes before cost of production. This will be transferred over here, and now the concept is simple. Cost of sales, I will be transferring it to costing P&L account. Whenever the sales is made by GLA, this is the sales figure. This will be also transferred to costing P&L account. In costing P&L account, here there will be sales. Here there will be cost of sales. You will be getting costing profit, which will be transferred ultimately to GLA. Sir, what is this account? As we are not preparing full-fledged accounts, but we want to pass dual entry, one debit and one credit. So the accounts which we are not preparing, that figure we will be transferring to general ledger adjustment account or cost ledger adjustment account. Any name can be given. This is a general account because we are doing non-integrated system of cost accounting. We have done illustration number 1. We are going to do 6.2. See 6.2. The following balances were extracted from a company's ledger as on 30th June. Raw material control account, WIP control account, finished stock control account. And the last point is general ledger adjustment account. The following transaction took place during the quarter ended 30th September. The amount is in rupees. So you are writing your books of accounts not for a year, not for a month, for a quarter. The factory overhead allocated to work in progress is 1,36,350. Goods finished at cost 13,76,200. Raw material purchased 12,43,810. Direct wages allocated to WIP 2,56,800. Cost of goods sold 14,56,500. Raw material issued to production 13,60,430. Raw materials credited by supplier 27,200. Raw material losses because of inventory audit is 6,000. Work in progress rejected with no scrap value 12,300. Customers return at cost of finished goods 45,900. Prepare raw material control account, WIP control account, finished stock control account, general ledger adjustment account. I will be preparing practically all the accounts which I feel are necessary. You will not need administrative overhead, selling and distribution overhead control account. You will not need sales account. You will not need costing P&L account. Because practically sales is not given. Let's start 6.2. First, raw material control account. This is opening stock of raw material 2,82,450. 2,82,450. This will be opening stock of raw material. Work in progress 238,300. Work in progress 238,300 is nothing but opening. Finished stock control account 392,500. 3,92,500 is nothing but opening stock of finished goods. General ledger adjustment account 9,13,250. 9,13,250. As this was a tallied sheet, I am giving just one effect. For any other transaction, I will have to give dual effect. One debit, another credit. The following transaction took place during the quarter ended. Factory overhead allocated to work in progress. What is this? Try to understand. WIP account debit to factory overhead. The factory overhead which are absorbed by work in progress. They are not. What comes on debit side of factory overhead? Can you tell me? Factory overhead incurred and not factory overhead absorbed. Absorbed comes on credit side, and this is this figure 1,36,350. Where the second effect will go? Credit effect I have given you. Debit effect WIP 136,350. We have passed dual effect. Finished goods at stock. Tell me, finished goods at cost are transferred from where to where? WIP to finished goods. WIP is the place where finished goods at cost are manufactured, right? So finished goods at stock comes over here by transferred to finished goods. These are finished goods at cost manufactured, which is 13,76,200. Second, it will go in finished goods account to WIP 13,76,000. What is the mistake if I write it down over here? Can you tell me? 13,76,200. What is the mistake? What is written on credit side of finished goods stock account? Cost of goods sold, right? What goes out of the finished goods department? Can you tell me? What goes out of the finished goods department? They are the goods which are sold. If they are not sold, they will remain in closing stock of finished goods, right? So only goods sold. Are this cost of goods sold or cost of goods manufactured? Manufactured. So it cannot be written over here, right? 13,76,200 is the correct answer. correct effect that we have given. Raw material purchased 12,43,810. 12,43,810. Raw material stores account to GLA. GLA account credit side 12,43,810. Direct wages allocated to work in progress. See where I am writing it down. By WIP, which is direct wages. 256,800. And in WIP debit side, 256,800 to direct. Cost of goods sold. Can you tell me who transfers cost of goods sold to whom? Which department transfers to whom? Finished goods to cost of sales. This is 14,56,500. 14,56,500 by CO. COS will be debited to finished goods control account. 14,56,000. Raw material issued to production. Raw material issued, going out credit side, it is issued to production by WIP. It is 13,60,430. It is coming in production, so WIP will be debited 13,60,430. Raw material credited by supplier. It is practically returned to suppliers. They are returned to suppliers, not credited. Credited by suppliers, they credit us if we return them. Yes, so it might be written in, but it is returned to suppliers. It is GLA account debit to raw material control account, 27,200. Raw materials are going out. Who will be debited is GLA, 27,200. Raw material loss. Now this we are learning for first time, but it is not very much difficult. Raw material lost due to inventory audit. You have done audit of raw materials and some raw materials were missing and they were lost. First, normal reason or abnormal reason? It is abnormal reason. It cannot be a normal reason. Material lost cannot be a normal reason. Material lost by fire cannot be a normal reason. By earthquake cannot be a normal reason. But if the type of material is such, say plastic or glass, which is breakable and it breaks and there is a loss, it is a normal loss. So this is an abnormal loss. First, should raw material stores or control account should be affected or not? It will increase or reduce? Reduce. So 6,000 is written over here, right? Now we have not done this, but you should be very clear about it. It is lost by abnormal reason where I will transfer costing P&L account. If it is normal, I will absorb it somewhere. But if it is abnormal, it is always transferred to costing P&L account. By abnormal loss transferred to costing 6,000. 6,000 I am debiting it to costing P&L account. Abnormal loss of material. You might have not prepared costing P&L account. Believe me, my also costing P&L account is not actually costing P&L. It is just memorandum costing P&L because we are not having other figures also. 6,000. Yes, you will have to prepare either memorandum costing P&L or abnormal loss account. Again, work in progress rejected with no scrap value, rupees 12,300. Work in progress again should be credited, right? Because work in progress, some cost is, some goods are decreasing. It is 12,300. Again, it is abnormal reason will be transferred to costing P&L. 12,300 abnormal. Yes. In process costing, if it is abnormal loss, you value it at scrap value or you value it at NCN. NCN. Normal loss is valued at scrap value. Abnormal loss is always valued at actual cost. What is the cost of goods lost? 12,300. Here what should be written? 12,300. Sir, your material, if normal, what we should do? Then also here you should write down 6,000. Suppose this was normal. Why? I'll tell you. Which is this account? It is not a process account. It is a stock account. Your stock is decreasing or not? Yes. Whether it is normal or abnormal, your stock is decreasing or not? Yes. But what does normal loss says? It should be absorbed by good unit produce. So I will not be transferring it to costing P&L. I will be transferring it to WIP account. Once I transfer, suppose this was normal loss. Let us take this. This was normal loss. Someone says, sir, it should be valued at scrap value, so I should write down 0 over here. No. This is which account? It is stock. Whether the loss is normal or abnormal, the stock decreases. It should be written at cost over here. So 6,000 will be written over here. Normal loss is transferred to costing P&L or it is absorbed by good unit produced? Absorbed. So this 6,000 I will be writing over here. So what, once I write down 6,000 in WIP, what does it mean? My production cost of normal goods will increase, right? So this will be effect of if it was a normal loss. But it is not normal. Work in progress 12,300 also, both places I have written. Customer returned at cost of finished goods 45,900. You have sold the goods to customer. They have returned the goods costing rupees 45,900. You need to tell me only one account, whether it will affect my finished goods account or not. Or WIP account? No, WIP don't deals with customer, right? Finished goods deals with customer. Finished goods will increase or decrease? Increase, because this goods has come back, right? So it will be written on debit side, right? Written by customer. On debit side it is 45,900. All right. Where it should be transferred? Sales account. Sales account should decrease. But sales no figure at nothing. Here there is no sales figure. You will be transferring it to GLA, right? You will be transferring it to GLA. You may transfer it to sales account, then ultimately it will be transferred to GLA. You can transfer this to GLA. But your answer is correct. It should be practically transferred to sales account, credit side. 45,900 I have covered all the points. Nothing is pending. I can start solving the question. Raw material stores control account will be just having a closing balance. Two lakh 82,450 plus 12 lakh 43,810 minus 13 lakh 60,430 minus 27,200 minus 6,000, which is 132,630. Wages control account, there is no other figures. I will be assuming that whatever is transferred to WIP is incurred to GLA 2,56,800. GLA will be credited 2,56,800 by wages. Sir, why I have not taken this closing balance somewhere else? Because I am not preparing trial balance. They have not told me to prepare trial balance. I will not be preparing trial balance. Factory overhead only transferred to WIP is given. I will assume this is what is incurred to GLA 136,350. GLA credit 136,350. WIP opening is given, factory overhead, direct wages, raw materials, some abnormal losses, transferred to finished goods is given. Whatever is the figure will be closed. Closing, I will not be giving second effect because second effect comes in trial balance. $33, 55, 780. No, there is some mistake. 238, 300 plus 136, 350. Okay, this I have taken 13 lakhs. Plus 256, 800 plus 13 lakh 60,000 430 minus 12,300 minus 13 lakh 76,000 6 lakh 3,380. Finished goods, this will be my closing balance of finished goods. 392,500 plus 13 lakh 76,200 plus 45,900 minus 14 lakh 56,500. 3 lakh 58,100. Cost of sales is transferred to costing P&L account. I have done a costing P&L account. Let me transfer it to costing P&L. 14 lakh 56,000 14 lakh 56,000 1456. Sir, what to do with costing P&L because sales figure is not given? See, I am doing one thing. Instead of writing costing P&L account, I am writing memorandum costing P&L account. So only some figures are available. In absence of information, all figures should be transferred to GLA. This is what GLA is prepared for. 14,56,500 plus 6,000 plus 12,300. 14,74,800 will be transferred on debit side. 14,74,800 to costing P&L. Whatever is the balance will be closing balance of 9,13,250 plus 12,43,810 plus 45,900 plus 256,800 plus 136,350 minus 27,200 minus 14,74,800, 10,94,110 will be closing balance of GL. We are going to next question, which is the C6.3. The following information have been extracted from the cost records of JKL Manufacturing Company Limited. Stores, opening balance, purchase, the transfer from WIP, issued to WIP, issued for repairs, deficiency found in stock. Work in progress, opening balance, direct wages applied, overhead charge, closing balance. Finished production. Entire production is sold at a profit of 10% on cost from work in progress. Wages paid are 2,10,000. Overhead incurred are 7,50,000. Prepare stores ledger control account, WIP control account, overhead control account, costing P&L account. Again, I am preparing all the accounts. Whichever accounts I will not require, I will not be using it, like administrative overhead control, selling and distribution overhead control will not be prepared in your case. WIP, finished goods, cost of sales, sales, costing P&L, everything I will be preparing. General ledger adjustment account is always required. They are telling us to prepare general ledger adjustment account. No, we will not be preparing general ledger adjustment account. Second effect we will be ignoring, right? If it is coming in GLA, we will be ignoring. Opening balance of stores. So these are raw materials. Opening balance of raw material comes in raw material control account, debit side, opening balance 90,000. Purchases also comes in debit side, 4,80,000. We don't need to prepare GLA account, so we are not giving credit effect. Transferred from WIP. WIP has transferred the goods to stores department. What is this? Return of raw materials from production. So in WIP it will be credit side, in raw material it will be debit side. Transferred from WIP is 2,40,000. Here I will have to give another effect in WIP. Issued to WIP 4,80,000. Reverse entry. Issued for repairs in raw material stores account with side. Credit side, because it is issued 60,000. Second effect, where it will go? Production overhead or factory overhead 60,000. Deficiency found in stock 18,000. Will I treat it as normal or abnormal? I'll always treat it as abnormal. If it is normal, it should be given. If it is not given, I'll be treating it as abnormal. Abnormal will be transferred to costing P&L account 18,000. They have treated it as normal. Let us also treat it as normal. But I think if nothing is given, you can treat it as abnormal and transfer it to costing P&L account. Deficiency found in stock 18,000. We are treating it as normal. Should increase the cost of production. I will transfer it to WIP. I told you we will be transferring it to WIP. The answer is no. Why? WIP records what? Directly related to production. It will go in WIP. But it is not a direct expenditure. It is a indirect expenditure. So it should be routed it through factory overhead. Ultimately, it will go in WIP. 18,000. Opening balance of WIP is 1,80,000. Direct wages applied is 1,80,000. What is this? Direct wages applied, incurred, absorbed by WIP, right? 1,80,000 is absorbed by WIP. WIP debit 1,80,000. Overhead charges 7,20,000. What is this? Overhead incurred or overhead applied? Overhead charged. How incurred? What is the wordings? Overhead charged. What is the heading? WIP. This is overhead charge in WIP. Overhead charge in WIP is overhead absorbed. 7,20,000. And it will be factory overhead absorbed by closing balance of WIP is 1,20,000. Finished production. Entire production is sold at a profit of 10% on cost from WIP. Wages paid is 2,10,000. Help me out. Wages paid is 2,10,000. To GLA? 2 lakh. I am not preparing GLA account, so I am not giving second effect. Overhead incurred is 7,50,000. Factory overhead incurred is a 7 lakh. Incurred will be GLA. And thus we know entire production is sold at a profit of 10% on cost from. Let us first tally raw material. Raw material, I will be getting closing balance. What is the answer? 2,5, 2,50,000. What I will do with the difference in wages control? 2,10,000 is incurred. WIP has taken 1,80,000. What to do about 30,000? It will be transferred to factory. Factory overhead difference will be somewhat interesting. What is incurred? 90 plus 18, 7,50,000 minus 7,20,000. What is the difference? 1,30,000. It is under absorption of overhead. Again, it is not given. It is because of normal reason or abnormal reason. I told you if normal is not given, you should be taking abnormal. But here there is a problem. Here nothing was given and they have taken it normal. Just to verify the answer with book, we have taken it normal. Otherwise, if normal is not given, it should be treated as abnormal, right? If it is normal, it should be given. If it is not given, it should be treated as abnormal. It is because of abnormal reason transferred to costing P&L account. 1,38,000. Under absorption of factory. WIP also closing balance is given. So transferred to finished goods might not be there. This is transferred to finished goods, whatever is the balance. 1,80,000 plus 4,80,000 plus 1,80,000 plus 7,20,000 minus 2,40,000 minus 1,20,000. It is 12 lakhs. 12 lakhs rupees goods were manufactured and transferred to finished goods. Finished goods, there is no opening stock, closing stock. So there is no finished goods department, right? Whatever is processed is transferred to sales department. So whatever goods are manufactured are sold. 12 lakhs will be transferred to cost of sales. Cost of sales will be having 12 lakhs. If you have not prepared all this account, then also it is alright. This can be directly taken to cost of sales. Alright. What is the cost of sales? 12 lakhs or cost which is transferred from WIP. That is also 12 lakhs because there is no increase in cost in finished goods account. They say whatever cost is transferred from WIP, entire production is sold. See, entire production, no opening, no closing of finished goods is sold at a profit of 10% on cost. So what would be profit on this? 1,20,000. So what would be sales? 13,20,000. So sales will be 13,20,000. This will be transferred to costing P&L 13 lakh 20,000. Sales will be 13 lakh 20,000. Even if you have not prepared sales account, then also it is absolutely all right. You will be writing down 13 lakh 20,000 in costing P&L account credit side. This will be also transferred to costing P&L. And the balancing figure should be transferred to GLA. You should not be preparing GLA because they are not telling us to. When there is a loss, right? Loss will be transferred to GLA of had we taken this 18,000 normal loss as abnormal loss, our loss would be converted into profit. Had I taken this 18,000 rupees instead of normal, I have taken it as abnormal. Will my loss, ultimate loss, will be converted into profit? But it does not make any difference. Yes? That is all right. I am saying that this 18,000 will not become zero. This 18,000 remains 18,000. Instead of normal, if I treat it as abnormal, there will not be change. Try to understand. If you are just finding out space to write down something 18,000 on debit side, because you have written here credit side. If it is normal, I add it to factory overhead, not directly to WIP. Ultimately, it goes into WIP. And then if it is abnormal, I transfer it to costing P&L account debit side. So I write down either in factory overhead debit or costing P&L account debit. It will not make any difference to my final answer. This was 6.3. We are going to integrated system of cost accounting. For that, you will have to open yesterday's journal entry. We will be making some changes, some rectification that we have done today. Also, we will be understanding if it is integrated system of cost accounting. It is very difficult for you to write down along with me because you are not having any space to write down in your book, right? But I am just changing the accounts in this all journal entries. Particulars I am keeping it same. I will be giving this chart to you, right? Situation. You can see situation even from your book. Purchase of raw material. What is the journal entry we pass in non-integrated system? Raw material control account to GLA. It should be in integrated system, raw material control account to cash. And if it is purchased on credit, it will be credits. Return of raw material to supplier. Creditors account debit to raw material control. Please understand, wherever there is GLA, instead of GLA, some normal things will come like cash, creditors, debtors, whatever things comes normally in our financial books of accounts, that will come. Now we are preparing two separate books of accounts, financial and costing, or same? Same. So in our financial accounts, some accounts will increase. Normally, what you find out in your financial accounts? Cash, debtors, creditors, P&L account. This all is in your financial accounts. Now there will be some new accounts like stores ledger adjustment account, wage control account. Instead of wages account, it will be wage control account, factory overhead account, which was not there in your financial account, administrative overhead, selling overhead, WIP account, finished goods account, cost of sales account. Sales account you prepare even in your financial books of accounts. And there will be costing P&L account? No. Then cost of sales will go where? Indirectly profit and loss account. You will not maintain separate books of accounts for costing. Yes. If there is abnormal loss, it will be transferred to, instead of costing P&L, it will be termed as P&L account. If you are maintaining integrated system of accounting, it will be transferred not to costing P&L, it will be transferred to profit and loss account. Materials directly purchased by the production department. WIP control account debit. To GLA it is given, it will be to cash. Return to stores by production. Return of stores by production. It is the raw material control account debit to WIP. Next time I will be writing just this. It is the same. If raw material are transferred to WIP, it is WIP to raw material. If WIP transfers, that is production transfers raw material to raw material department, it is raw material to WIP. Whether it is integrated or non-integrated. These two accounts you prepare only in costing. You don't prepare in financial books of accounts. Raw material issued to production. Same journal entry will be passed. What is the journal entry? WIP to raw material. Raw material issued to factory for maintenance. Same. Normal loss of raw material. Yes, we have done this, right? Normal loss of raw material. We have written correct journal entry. It will not directly transfer to WIP. It is transferred to factory overhead control account to raw material control account. So it will be transferred not directly but indirectly to WIP. And it will be transferred to factory overhead. Abnormal loss of raw material. Instead of costing P&L, it will be P&L, but the journal entry will remain same. Wages incurred. Wages to cash. Direct wages absorbed by production. Same. Indirect wages absorbed by production. Same. Factory overhead incurred. Factory overhead to cash. Factory overhead absorbed by production. Same. Under absorption, absolutely same. Abnormal reason, absolutely same. Over absorption of overhead, exactly same. Administrative overhead incurred. Administrative overhead to cash. Administrative overhead absorbed. Directly related to production. I am changing the answer of non-integrated also. What we have written, administrative overhead directly related to production. It will be absorbed by, if it is directly related to production, it will be absorbed by finished goods to overhead. And if it is not directly related to production, it is the cost of sales to administrative. Administrative overhead directly related to production will be absorbed by finished goods. Indirectly related to production will be absorbed by cost of sales. And for not integrated, it will remain same. Under absorption of administrative overhead, same. Selling and distribution overhead incurred, selling and distribution to cash. Selling and distribution absorbed, same. cost of finished goods transferred from WIP to finished goods. Finished goods control account. Yes, you were correct. Finished goods control account to WIP. In non-integrated system, it will remain, integrated system, the journal entry will remain same. COGS transferred to finished goods will remain same. This will remain. Sales. What will be journal entry for sales in integrated system? It will be sales to cash. Cash to sales. Cash / debtors to sales. If it is credit, debtors will be debited. Sales are transferred to costing P&L account will be same. This entry is not passed in integrated. You don't prepare costing P&L account, right? You prepare profit and loss account under your financial system. So abnormal loss of material, already we have written the entry. So I was planning to write it down again, but abnormal materials where it will be transferred, costing P&L, abnormal. And normal loss of material will be transferred to factory overhead. Other point also, administrative overhead direct will be absorbed by finished goods and indirect will be absorbed by cost of sales. Why I was able to write down same very fast? No cash, no GLA was involved, right? If GLA is involved, the journal entry will change. If GLA is not involved, that means other financial related accounts are not affected. So it will, the journal entries are going to remain same. There is no concept in financial books of accounts of absorption. So absorption, under absorption, this all will be in costing only and will not be in financial account. So journal entry, whether it is integrated or non-integrated, it remains same. We are going to do 6.4. The following information is available from a company's record for the March. Opening balance of creditors. So creditors balance is given. Closing balance of creditors. Payment made to creditors. Opening balance of stores ledger control account. Closing balance of stores ledger control account. Wages paid for 8,000 hours. That is 4 lakhs. 20% relates to indirect workers. Various indirect expenses incurred are 60,000. Opening balance of WIP control account is 50,000. Inventory of WIP at the end of the month includes material worth rupees 35,000 on which 400 labor hours has been booked. The factory overhead is charged to production at a budgeted rate based on direct labor hours. Budgeted overhead cost was 20,80,000 for a budgeted direct labor hours of 1,04,000. Prepare creditors account, stores ledger control account, WIP control account, wages control account, and factory overhead control account. So I will be preparing just one more account, which is creditors account. Other accounts will remain same. This is C6.4. So all these accounts I will be preparing. Creditors, stores ledger control, WIP control, wages control, factory overhead control. Let us start solving it. Opening balance of creditors account is 25,000. Creditors account credit side by opening 25,000. Closing balance of creditor 40,000. Closing balance comes on debit side. 40,000. Payment made to creditors 5,80,000. It is creditors to cash 5,80,000. Creditors to cash 5,80,000. Sir, why we don't prepare cash account? We prepare cash account in integrated books of account. Integrated books of accounts, we prepare everything to prepare trading P&L and balance sheet. But in this question, they have not asked us, so we are not preparing cash account. Opening balance of stores ledger control account, 40,000. Closing balance of stores ledger control account, 65,000. Wages paid is 4 lakhs. To GLA, to cash. GLA comes in non-integrated, which is 4 lakhs. They have given us some working that will be useful. Various indirect expenses incurred is 60,000. This is factory overhead incurred to cash. Is how much? 60,000. Opening balance of WIP control account, 50,000. And now are the points where your real test of costing will come into picture. Inventory of WIP at the end of the month includes material worth rupees 35,000 on which 400 labor hours has been booked. Factory overhead start to production at a budgeted rate. Factory overhead is charged to production, means is absorbed at a budgeted rate based upon direct labor hours. This company absorbs the overhead by traditional method or ABC method. And what is the base for absorbing the overhead? Only direct labor hours. What were budgeted overhead cost? 20 lakh 80,000. What were budgeted labor hours? 1 lakh 4,000 labor hours. What will be absorption rate? Chapter of costing. What is the absorption rate? 20? 20 rupees per labor. This is what this 2 points says us. Alright. Can you tell me how much wages is paid? Rupees 4 lakh? How many total hours workers have worked? 8,000 hours. What is wages per hour? What is wages per hour? 4 lakh divided by 8,000. It is 50. 50 rupees. So laborers are paid 50 rupees per hour, right? Let me try to close everything, and during closing I will be teaching you 1 or 2 important points. Let me first close the creditors account. Creditors will not be affected, believe me. Creditors 25,000, 40,000 and cash paid is given. So this will be purchase of raw material. Whatever is the balance is purchase of raw material. This is 6 lakh 20 minus 25,000, that is 5 lakh 95,000. And if the raw materials are purchased, it will be going in raw material control account. 5 lakh 90 raw material. I am also closing raw material account and I will be transferring it to WIP. I am assuming there is no indirect material. I will be transferring it to WIP. 5 lakh 95,000 plus 40,000 minus 65,000, which is 5 lakh 70,000. Wages will be also easy. We know how the wages is paid. It is 8,000 hours into 50 rupees. Now they have given in the bracket. It is very easy. 20% relate to indirect workers. So 80% relate to direct workers. So 80% is direct wages. What is 80% of 4 lakh? 3,20,000. Where the direct wages should be transferred? To WIP. WIP 3,20,000. And remaining 80,000 will be transferred to factory overhead, which is indirect wages. How much is the factory overhead incurred? 80 plus 60? 1,40,000. How much factory overhead will be absorbed? Here the figure is not directly given. But believe me, they have given you absorption technique. They have given you absorption technique. How much factory overhead or how much overhead you absorb? 50 rupees per labor hour worked. How many labor hours are worked in current year? How many labor hours are worked in current year? This should be absorbed. How many labor hours are worked in current year? Not current year, it is current month probably. Current month, how many labor hours are worked? 8,000. What is the absorption rate? Don't take it 50. Huh? Why 50 is not an absorption rate? What is 50 then? What is 50? It is wage rate. When the laborers are paid, they are paid 50. When the overhead is absorbed, it is absorbed based upon labor hours and it is 20 rupees per labor hour. That is multiplied by 20 will be absorbed. It is 1,60,000. This was one good point. But let us change the answer. It says it should be rupees 20 per direct labor hour. How many total hours are worked? 8,000 hours are total hours, out of which 20 are indirect. So 20% is indirect, which will be 1,600. This will be 6,400 will be direct labor. Even if we had done with 8,000, believe me, our answer is correct, but we are just rectifying our answer by 6,400. $6,400 into 20. What is the answer? 1,28,000. This is 1,40,000. This is 1,28,000. So this will be 12. One lakh. Creditors is already tallied. There is only one point which is WIP. Please understand, whatever comes in WIP should be regarded as closing stock. This cannot happen. It is not possible to assume that in one factory no finished goods is manufactured. All finished goods are WIP. So two figures are missing. Transferred to finished goods and closing WIP. Where closing WIP hint is given. Inventory of WIP at the end of the month includes material worth rupees 35,000. 400 labor hours have been booked. Alright. So closing WIP includes material, labor and overhead. It is possible in WIP some material is used, some labor is used and some electricity is used. It is 100% used or some percentage used. So we have done it in process account, right? Some percentage used. How much material is used in WIP closing stock? 36. It is 35,000 rupees. They have not given how much labor rupees is used, but they have given how much labor hours are worked on this WIP. How much hours are booked? What is meaning of booked? You have written that this much labor hours are worked on this particular WIP stock. How many labor hours? 400 labor hours. So what will be labor cost? 400 into 20. No. Into 50. Which is how much? 20,000 rupees. So you know that on this WIP 400 hours are used. We don't know overhead, so we will be taking it 0. No. Overhead is absorbed always based upon labor hours. We know the labor hours. What are the labor hours? 400. What is the absorption rate? 20. So 8,000 rupees I will also book of overhead. This will be 63,000 rupees, which will be closing WIP. I will be getting how much will be transferred to finished goods as a balancing figure. 50,000 plus 5, 70,000 plus 3, 20,000 minus 63,000, 877,000. $128. Sorry, we have not written this. This should be written. Factory overhead absorbed by WIP. Second effect we have forgotten. 1,28,000 should be written over here. Factory overhead absorbed. So 8,77,000 will increase by 1,28,000. 10,05,000. A good question because it includes concept of costing also, right? The basic concept of overhead, absorption of overhead, wages also. We are going to next question, which is extremely easy, 6.5. And most probably they will not tell you to draw books of accounts. There are less number of units in India who prepare costing books of accounts. But this might be asked, journalizing the entries. Because even if they ask this question, they'll have to ask it for 8, 10, 12 marks. Journalize the following transaction assuming cost and financial accounts are integrated. Integrated or non-integrated? Integrated. Material issued, direct and indirect. You need to pass journal entry not of material purchased. of material issued. So what will be material issued direct journal entry? Material are issued directly to production. WIP control account to raw material control account. 3,25,000. Should you write down the narration? Whenever you write down journal entry, always write down narrations. Can you help me out? Indirect material issued. What will be the journal entry? Indirect factory overhead. Factory overhead control account debit to raw material control 1,15,000. Allocation of wages 25% are indirect, 6,50,000 into 25%. 1,62,500 are indirect, and so how much is direct? 4,87,500. Direct wages absorbed will be WIP control account to wages control account. 4,87,500. 4,87,500 being direct wages absorbed by WIP. Indirect wages will be absorbed by factory overhead 162,500. Factory overhead control account to wages control account. 1,62,000. Fifth is under or over absorption of factory overhead. Factory overhead over absorbed 2,50,000. Factory overhead over absorbed. All right. If it is under absorbed and if we transfer it to costing P&L account, can you tell me what is the journal entry? Costing P&L to factory overhead. So factory overhead is credited in case it is under absorbed. You can also visualize the accounts, right? Factory overhead. If it is under absorbed, you will have to write it down on credit side. So factory overhead will be credited. If it is over absorbed, factory overhead will be debited, right? If it is over absorbed, factory overhead account debit. It is 2,50,000. Factory overhead account debit. To what? Costing P&L. Over absorption, there are different ways, right? If a negligible amount, you can ignore. If you want to transfer it to costing P&L account, you can transfer it to costing P&L account. If you want, you can carry it forward to next year by creating a reserve. So these are the three effects of over absorption of any overhead. If nothing is given, I will be transferring it to costing P&L 2 lakh. Okay, you can write down P&L. It is integrated, so it will be P&L. You may write down the note. It may be transferred to next year by creating a reserve. Under absorption of administrative overhead. Under absorption of administrative Under absorption means the account will be credited to administrative overhead control. What should be debited? If the costing P&L, it is under absorption. Under absorption, if it is for abnormal reason, then costing P&L. If it is for normal reason, then it is finished goods or cost of sales. Is it all? Whether it is given or not. It is given, not given. Normal is not given. See, always apply this except that wages, right? If normal is not given, it is always treated as abnormal. Try to understand anything which is a normal loss, normal under absorption should always be given by headquarters to you, right? That it is a normal loss. So it will be treated as a normal loss, will be transferred to P&L. Write down always assumed to be normal. It will create a good impression to paper checker. Assumed as abnormal. Payment to sundry creditor, no entry. Or you will be passing an entry. Yes, it is integrated. You will be passing. If it was non-integrated, then no entry. In costing books of accounts, you don't pass any entry. Payment to sundry creditors, if it is integrated, it is creditors to cash. Whatever is the figure, 1,50,000. Collection from debtors is cash to debtors. This was 1,50,000. This is we are solving C 6.12. Journalize the following transaction in cost books under non-integrated system of accounting. Credit purchase of material. Help me out with the journal entry. Raw material control account debit to cash to general ledger adjustment. Sir, in examination, can we write down GLA? Yes, sir, but it is a good idea. First time you write down full general ledger adjustment account and in bracket write down GLA like this. General ledger adjustment account and in bracket write down GLA 27,000. Now onwards you can write down GLA, right? This is a good idea. Even if you write down directly GLA, I don't think your marks will cut. Manufacturing overhead charge to production. Factory overhead charge to production. Manufacturing is a factory overhead charge to production. WIP to factory overhead control account. Selling and distribution overhead recovered from sales. It is nothing but selling and distribution overhead absorbed by cost of sales. Recovered from sales is you have done your sales and you are recovered your selling and distribution overhead. So it is selling and distribution absorbed. Selling and distribution overhead is absorbed by whom? Cost of sales account debit to selling and distribution overhead control account. which is 4,000. Indirect wages incurred. See, when they have they have specified that it is indirect wages, I will be passing for incurrence also and I will be passing for absorption also, because they have not written wages incurred. They have written indirect wages incurred. When it is incurred, what journal entry I pass? Wages control account debit to GLA is how much? 8,000. And where indirect wages will be absorbed? Factory overhead control account debit to wages control. 8,000. Of course, this journal entry is for absorption. Even if they have not asked, we will be passing a journal entry because they are specifying it is indirect wages. Material returned from production to stores. Stores to WIP. Stores or raw material control account debit to WIP, which is 9,000. And this is end of the questions which are having integrated concept, non-integrated concept. We are only pending with one topic in this particular, that is reconciliation between cost accounting and financial books of accounts. For that, in next lecture, you should be ready with cost sheet. You should be revising cost sheet and coming in next lecture. In this lecture, we are going to learn something related to reconciliation between profit as per profit and loss account and profit as per cost account. Let us first understand how profit as per profit and loss account is derived. So we are preparing trading and profit and loss account together. This is trading and profit and loss account. On credit side of trading account, say it is by sales. Sales of this company is say 10,000. On credit side, there will be also closing stock, which is say 5,000. On debit side, there is opening stock, which is 2,000. There is purchases of raw material, which is 8,000, and GP is of 5,000. But as I am preparing trading and P&L combined, I am not finding out GP and again carrying it forward. I am continuing with profit and loss account. On credit side, there is interest received of 3,000. And there is a dividend received of 2,000. On debit side of profit and loss account, there is administrative overhead of rupees 3,000, factory overhead of rupees 2,000, and selling and distribution overhead of rupees 1,000. On debit side of trading account, let me add one more thing, which is wages of 1,000 rupees. And also we have written off goodwill. So there is goodwill written off of say rupees 500. I will be getting profit as per P&L. Profit as per P&L account will be 20,000 minus 10, 11, 14, 16, 17, 17,500 minus 20,000 will be 2,000. This is how we find out profit as per our financial books of accounts. That is by preparing trading account and profit and loss account. I have got a profit of 2,500. I am preparing a cost sheet. We have already learned how to prepare cost sheet. I am preparing a cost sheet and finding out answers of cost, profit and loss account of the same company for the same financial year. Say this is for 2021. Then I am finding it for 2021 itself. Cost sheets start with raw material consumed. Raw material consumed or purchased is 8,000 rupees. Direct wages is 1,000 rupees. There are no other direct expenditures. So prime cost is 9,000 rupees. What we add after prime cost is factory overhead. Factory overhead incurred is not written in cost sheet. What is written in cost sheet is factory overhead absorbed, and it is absorbed based upon some predetermined rate. Factory overhead in such a manner absorbed was 1,800. This was a factory overhead. So my factory cost came to 10,800. Then we add some administrative overhead related to production, and in this case administrative overhead which are related to production is 0, and I have got answer of cost of is how much? 10,800. Then I add opening stock of finished goods. I am adding opening stock of finished goods. Yes, of course I have ignored WIP in this case, assuming there is no WIP. Opening stock of finished goods is say 2,500 minus closing stock of finished goods is 5,000. I will be getting COGS, which will be 10,800 plus 2,500 minus 5,200, which is 8,100 is COGS. I will be adding selling and distribution overhead, which is rupees. Selling, distribution and some administrative overhead which is not related to production, which is totally 4,000. Let me write down separately. Selling and distribution overhead is 1,000 and administrative overhead is total is 4,000. This is nothing but cost of sales, which is 8,100 plus 1,000 plus 3,000. So it is 12,100. I will be adding profit, and this will be profit as per cost accounting. Profit as per cost accounting will be, because my sales is 10,000, it will be 7,900 for the same company for the same period 2021. Now try to concentrate profit as per financial books of accounts and profit as per costing books of accounts. These two figures. They are same or they are different? They are different. If the profit for the same company for the same period in financial books of accounts and costing books of accounts are different, we will have to do reconciliation. We will have to explain why they are different. Let us try to understand why they are different as far as profit as per costing is concerned and profit as per financial books of accounts are different. Why there is a difference in? Let us first take the sheet. Let us see where opening stock is coming over here. In trading and profit and loss account, opening stock is on debit side. It is how much rupees? 2,000 rupees. What is opening stock of finished goods over here? 2,500. We are talking about this. This is 2,000. This is 2,500. So valuation of opening stock as far as financial books of accounts is concerned and costing books of accounts is concerned is different. The valuation is different. Even closing stock valuation is different. In financial books of accounts it is 500. In costing books of accounts it is 5,200. So I can write down the reasons. Number one, valuation of opening and closing stock, maybe of raw material, maybe of WIP, maybe of finished goods. Second, try to concentrate. Wages is 1,000 over here, direct wages is 1,000 over here. Anything which is the same will not create a difference. The profit should remain same if the figures are same. Raw material is 8,000. Raw material is 8,000. Say if the raw material issuance in costing is say by FIFO, LIFO and when, and in financial books of accounts it is different, the figures would be different. If the figures is different, they will create reconciliation or it will require reconciliation because the figures in finance and costing is different. Sales in both the cases same. And it will be normally same. Let us go to administrative and selling overhead. Administrative overhead is 3,000. It is 3,000 in financial costing books of accounts also and financial books of accounts also. Selling and distribution is 1,000. Selling and distribution is 1,000. If they are different, it will result into reconciliation. If they are not different, it will not result into reconciliation. Let us go to factory overhead. Factory overhead is 2,000 over here. Factory overhead is 1,800 over here. Mathematically, you understand that it will result into reconciliation. But try to understand why they are different. Financial books of accounts records a factory overhead which are incurred. Electricity bill of 10,000, it will record 10,000. Electricity account debit to cash 10,000, which is nothing but actual figure. What is recorded in costing is absorbed overhead. It might over absorb, it might under absorb. In this case, it is under absorb, but it might even over absorb. Over absorb, under absorb results into difference in figure in financial and costing books of accounts as far as the factory overhead, administrative overhead and selling overhead are concerned. What is the difference? Costing uses absorption method and financial records actual cost, actual figures of cost. So there will be a difference normally in factory overhead because costing records absorbed and financial records actual figure. So these are administrative overhead which are actual. Sorry, factory overhead which are actual, and these are absorbed. And so it will create a difference. I will be writing down second reason under and over absorption of overhead will be another reason why financial and costing books of accounts does not tell. Other things, interest received. Interest received is recorded where in cost sheet. Cost does not record financial items like interest received, interest paid, no financial items, dividend received, no financial items are recorded in cost books of accounts. It is recorded only in financial books of accounts. So, third reason is some incomes and expenditures are recorded only by financial accounts, like financial income and expenditures are one of the points which are recorded only by financial books of accounts. Another is if you are writing off goodwill, writing off preliminary expenditures, these all are accounting concepts. Writing off expenditures in profit and loss account, these are recorded only by financial books of accounts and not recorded by costing books of accounts. So, interest received, dividend received will also not be recorded by cost books of accounts. Goodwill written off is never recorded in cost books of accounts. This all will create a reconciliation. The financial profit and cost profit will not tally because of this reason. So only profit in trading profit and loss account is 2,500 and profit over here is 7,900. But still, we have understood why there is a difference between costing profit and financial profit. We need to explain also. We need to reconcile the profit as per cost books of accounts and financial books of accounts. Let us prepare a reconciliation account whereby we will be reconciling along with figures why the profit of cost books of accounts and profit of financial books of accounts. This is my reconciliation statement. What is P&L profit or profit as per financial books of accounts? Profit as per financial books of accounts is 2,500 and profit as per costing books of accounts is 7,900. Instead of preparing a reconciliation sheet, I will be preparing reconciliation account whereby I will explain along with the reasons why these two figures are different. For learning this, try to concentrate. We have derived a art cum science of solving this type of reconciliation statement. We are starting with profit as per financial books of accounts. Why we have written it on credit side? Profit is always having a credit balance. So we have written it on credit side. And the balancing figure if credit will be written on debit side. So the closing or the costing profit we have written it on credit side. So technically we want to convert this financial profit into costing profit. So I will be using this technique. This is the rule that we'll be following. Follow the God. Who will be treated as God in our case is costing profit or costing books of accounts will be treated as God. This is costing. costing books or costing profit will be treated as God. I'll logically explain you this rule also, but first let us try to understand the rule, follow it and try to create a reconciliation account from it. Follow the God basically means do whatever God has done and undo whatever God has not done. Practically follow God blindly. If God has debited 100, we have debited 100, it is all right. But if God has debited 200 and we have debited 100, we will debit 100 more without thinking anything. We will follow God blindly. And we are treating right now God as costing books of accounts. Understood the golden rule for solving reconciliation statement? Follow the God, do whatever God has done, undo what God has not done. We are trying to apply it in our case, starting with opening stock. Opening stock is 2000 by financial books of accounts. Opening stock is 2500 as per costing books of accounts. Let me write it down. Opening stock as per financial books of accounts and as per costing books of accounts. Opening stock as per financial books of accounts is 2000 and costing books of accounts it is 2500. Now you should be knowing this opening stock is having a debit balance. Whether it is financial books of accounts, whether it is costing books of accounts, it is having a debit balance. Do what God has done. Who is God in our case? Costing books of accounts. They have debited how much? 2500. We should debit how much? 2500. What we have already debited? 2000. We will debit 500 rupees. We will debit 500 rupees. So that if we debit 500 rupees, now we have also debited 500. Costing books of accounts have also debited 500. We will be debiting 500 rupees. Let me debit 500 rupees in our reconciliation statement. Difference in opening stock. How much rupees? 500. Let me take all figures of debit side which was creating reconciliation. I have already highlighted it with yellow color mark that these are the differences which creates the problem. The factory overhead. Factory overhead in financial books of accounts is 2000. Factory overhead in cost sheet is 1800. Let me write it down. Factory overhead is having which balance normally? Debit balance. In financial books of accounts it is 2000. In cost books of accounts it is 1800. Do what God has done. Who is God for us? Costing books of accounts. What costing books of accounts has debited? 1800. What we have debited? 2000. How to match with God? Do what God has done. If I credit 200 rupees in my 2000 rupees debit, this is debit. If I credit 200 rupees, it will automatically become 1800 rupees, which is as per God, which is as per costing books of accounts. So I will credit 200 rupees because of factory overhead. It is under absorption of factory overhead. Which is credit 200. So I am writing it on credit side, which is 200 rupees. Next, goodwill written off. It is debit. Debit in financial books of accounts 500. What costing books of accounts have done? Nothing. Do what God has done. Undo what God has not done. God has not debited it. We have debited it. So we will be cancelling it. Credit 500. Goodwill written off. ₹500. We are through with the debit side of trading profit and loss account. We are going to credit side. Closing stock is 5,000 in financial books of accounts. Closing stock is 5,200 in costing books of accounts. Closing stock. Please understand closing stock as credit balance. It is the credit in financial books of accounts by 5,000 rupees. And it is credit in costing books of accounts by 5,200 rupees. Do what God has done. What God has done, it has credited 5,200. What we have done, we are financial books of accounts. If God is costing books of accounts, we have credited 5,000 rupees. If we want to match with God, we will have to credit 200 rupees more. This plus this will be is equal to this. So 5,000 plus 5,200 will be is equal to 5,200. We will be matching with God. We will credit 200 rupees. It is because of closing stock difference. We are crediting 200 rupees. Interest received 3,000. Interest received is a credit effect. Financial books of accounts, it is credited by 3,000. God has not done anything. Undo what God has not done. If we have credited 3,000, we will be debiting 3,000 rupees. This is interest. Same way dividend received. Dividend received, we have credited 2,000 rupees. Cost does not write down dividend received. We will be debiting 2,000 rupees. Undo what God has not done. So dividend credit 2,000 rupees. Sorry, debit 2,000 rupees. This is dividend received and it is affecting reconciliation. I need to even see cost sheet whether I have considered all the differences or not. Differences I have already tick mark with yellow color mark. Factory overhead we have already considered. Opening stock, closing stock we have already considered. And so everything else will be considered as far as my reconciliation statement is concerned. My reconciliation statement should now tally 2,500 plus 200 plus 500 plus 200 let's tally this, which is 2,500 plus 200 plus 500 plus 200 minus 500 minus 3,000 minus 2,000. What is the loss as per costing profit and loss account is negative 2,100. It is not profit because the answer is coming in negative. Is it tallied with this? Yes. Actually, we have done mistake over here. 12,100 is my cost and 10,000 is my sales. My profit as per costing books of accounts will be negative 2,001. So there is no profit in costing books of accounts. Actually, it is a loss in costing books of accounts. negative 2100. Is our answer tallied? Yes, negative 2100. If I write down, this is my reconciliation. Instead of writing negative 2100 on debit side, you can write down positive figure on credit side, 2100. But it is absolutely all right to write down negative 2100 over here. It is just a reconciliation statement. You are not doing presentation somewhere. You can write down negative figure on debit side as a loss of costing. This is how we do reconciliation. We started with profit as per P&L account. We reached at a profit as per costing account. Yes, we have done here one mistake. If our cost is 12,100, selling price is 10,000, our profit should be 2,100. We are getting costing profit of 2,100. Now, why this particular method we are using? We have started with our reconciliation statement. We have started with financial profit. If I want to convert it into costing profit, I will have to adjust my financial books of accounts exactly like costing. If I want to do everything like costing, then my profit will match with costing books of accounts. I want to get profit as per costing books of accounts. So we have treated costing books of accounts as our God. Sir, if we start over here with costing books of accounts, then you will have to treat financial books of accounts as your God. Sir, is it necessary? The answer is no. Believe me, you can always write down financial profit over here and costing profit over here. Sir, if costing profit is given and we need to find out financial profit, you can write down costing profit over here. Find out this answer. If such type of puzzle question is asked, if both the books are given, you will be having profit for both the books. Write down always a financial profit over here, costing profit over here. Always treat your costing as your God. Follow what God has done. Do what God has done. Undo what God has not done. And we have also understood how to follow this particular thing. Follow the God blindly just to prepare our reconciliation statement. If I follow everything what is written in costing, my profit will match with costing. As I told you, always keep financial over here, costing over here. Treat God as costing, then understand if you can do this very much fast. If there is under absorption, it will go on credit side. If there is over absorption of overhead, over absorption is always done by costing. Over absorption of overhead, it will always come on debit side. Without thinking, you can write this down, but understand, be sure you are writing financial profit over here and costing profit over here. Then only under absorption will come on credit side and over absorption will come on debit side. So under absorption of overhead, over absorption of overhead, other all things, every time you find out the points, you can always do logically. Now understand opening stock also. Opening stock was overvalued by costing books of accounts. So overvalued by costing will always come on the side. So you will be, if you solve 5-6 sums, you will be having an idea on which side to write down without even finding out that logic of God. But this is a good method to solve a reconciliation statement. Whenever reconciliation sheet is asked, reconciliation statement is asked, I will be always preparing this particular reconciliation account with debit and credit column. Once again, what I did on credit side, opening balance, I took profit as per financial accounts. On debit side, I write down closing balance, that is a balance which is profit as per costing account. I treated costing as a God. If I write down financial over here, costing over here, I can treat costing as a God. Do what God has done, undo what God has not done. Follow the principle, give debit and credit effect. You will be getting answer of your reconciliation. Don't do silly mistake like me, whereby 12,100 minus 10,000, I am writing 7,900, which should be negative 2,100. Let us solve some of the questions which are related to this reconciliation of costing profit and financial profit. This is C6.6. ABC Limited has furnished the following profit and loss account for the financial books for the year ended 31st March. So this is practically trading and profit and loss account which is given. Opening stock is 500 units at the rate of 140. Sales is 10,250 units at 28,70,000. Closing stock is 250 units at the rate of 200 each. So sales plus closing is 10,500. How many units was opening? 500. So how many units you might have purchased? 10,000 units. It is very simple. If you draw unit column in your inner column, you will be getting it. If you sell 10,250 units with a closing stock of 250 units and opening stock of 500 units, means you have purchased 10,000 units. Wages is 6 lakhs. Gross profit is given. Factory overhead, administrative overhead, selling expense, bad debt, preliminary expenses, net profit, gross profit, interest and rent received is already given. The cost sheet shows the cost of material at the rate of 104 per unit and the labor cost at 60 per unit. Factory overhead are absorbed at 60% of labor cost and administrative overhead related to production activity at 20% of factory cost. Selling expenses are charged at the rate of rupees 24. The opening stock of finished goods is valued at 180 per unit. Prepare a statement showing profit as per cost for the year ended 31st March. So we will be preparing cost sheet. I will be getting profit for the year. A reconciliation of the profit as disclosed in cost accounts with profit shown in financial accounts. So we need to prepare our reconciliation account. Two things, cost sheet and reconciliation account. Let us first draw it. So we need to first prepare cost sheet. The cost sheet shows the cost of material at the rate of 104 per unit. So raw material cost, 10,000 units we have purchased. This we came to know from our trading account, into 104 will be 10,40,000. Wages cost in cost sheet, labor cost is 60 per unit. My prime cost will be 11 lakhs. Factory overhead are absorbed at 60% of labor cost plus factory overhead 60% of labor cost, which is 60,000, which is 36,000. 11,36,000 will be gross factory cost. Administrative overhead, but they are related to production. If they are not related to production, I will be aligning them with selling and distribution overhead. If they are related to production, I'll have to add it in my factory cost. Administrative overhead related to production activity is 20% of factory cost. So 20% of this. Administrative overhead 20% of factory cost. That is 11,36,000 into 20%. Which is 2,27,002. This will be my cost of production. We need to make one changes. This is not 60,000. This is 6 lakhs. So this will not be 11 lakhs. This will be 16 lakh 40,000. This is 6 lakhs into 60% will be 3 lakh 60,000. So this will be 20 lakhs. This will be absorbed at 20% of 20 lakhs. Will be 4 lakhs rupees. Cost of production will be 10,000 into 60 is 6 lakhs. Cost of producing this 10,000 units is 24 lakhs plus opening stock of finished goods. Now they are telling us opening stock of finished goods is valued at rupees 180 per unit. What is opening stock in units? 500 units, and it is valued at 180 per unit. So 500 into 180 will be my opening stock. 500 into 180 will be 90,000. Will be added minus closing stock of finished goods. First, in units, how many units are there of closing stock of finished goods? Is 250 units multiplied by. Normally, cost sheet values, if nothing is given, FIFO, LIFO, VAM, nothing is given, cost sheet values closing stock at cost of production. What is cost of producing 10,000 units? 10,000 units, cost of production is 24 lakhs. What will be cost of producing 250 units? So 24 lakh divided by 10,000 will be 240. 24 lakhs divided by 10,000, that is 240 rupees per unit, multiplied by 250, which will be 60,000. This will be 240 per. My COGS will be 24 lakh 30,000 plus selling and distribution overhead. See, whatever might be written in financial books of accounts, we are concerned with costing. Selling expenses are charged at 24 per unit sold. How many units are sold? 10,250 into 24. 10,250 into 20. And this we have done in costing, right? If we are finding out cost of 10,000 units, then adding a cost of 500 units, then deducting a cost of 250 units, then COGS is for 10,250 units. So from now onwards, any cost, any profit, any sales will be based upon 10,250 units. My answer will be 10,250 multiplied by 24, which is 2,46,000. This will be my cost of sales. Cost of sales again will be of 10,250 units, which is 26,76,000. And what is my sales? Sales remains same whether it is costing or financial books of accounts, 28,70,000. So what will be my profit as per cost books of accounts? Will be 28,70,000 minus 26,76,000. 1,90,000. 1,94,000 will be costing profit. Is it matching with financial profit? No. Reconciliation statement will be required. Profit as per financial books of accounts is 1,92,000. Profit as per financial books of accounts is 1,92,000, and profit as per cost books of accounts is 1,94,000. We need to do reconciliation. Who will be our God? Cost will be our God. Do whatever costing books of accounts has done, undo what costing books of accounts has not done. Let us first tick mark the differences. Raw material is 70,000 over here. Sorry. Raw material is 10,40,000. Raw material is 10,40,000. I don't need to tick mark it. Wages is 6 lakhs. Wages is 6 lakhs. So it will not create any reconciliation. Opening stock is 70,000. Opening stock of finished goods is 90,000. So opening stock will create reconciliation. Sales is same, it will not create reconciliation. Closing stock is 50,000. Closing stock is 60,000. It will create reconciliation. I'm going to P&L. Factory overhead 3,79,000. Factory overhead 3,60,000. It will create reconciliation. Administrative overhead 4,24,000. 4 lakhs. Selling expenses 2,20,000. 2,46,000. It will create reconciliation. Bad debt is there in financial books of accounts. It is never written in costing books of accounts. It will create reconciliation. Preliminary expenses will create reconciliation. Interest will create reconciliation, and rent received, because this all are the points which are never written in costing books of accounts. So it will create reconciliation. Let us solve one by one. Opening stock as per financial books of accounts is 70,000. Now, as it is the first question, I am solving it in detail. Financial books of accounts, costing books of accounts. Opening stock, which is having a debit balance, in financial books of accounts it is 70,000. In costing books of accounts it is 90,000. 70,000. 90,000. Who is God? Costing books of accounts. We are financial books of accounts. What God has done, we will have to do. They have debited 90,000. We have debited 70,000. We will be debiting more 20,000. In reconciliation statement, difference in opening stock, debit side 20,000. I am first taking debit side. Factory overhead 3,79,000 as per financial books of accounts. Factory overhead is debit. 3,79,000 as per financial books of accounts. And 3,60,000 as per costing books of accounts. We need to do what God has done. They have debited 3,60,000. We have debited 3,79,000. We will credit, we will reverse 19,000 so that this plus this will be is equal to 3,60,000. Debit 3,79,000 minus 19,000 will be is equal to 3,60,000. Credit 19,000. Difference in factory overhead, or you can write down technically, it will be under absorption. Under absorption of factory overhead. $19,000. Administrative and selling, I am going fast because I know under absorption will come on credit side, over absorption will come on debit side. Administrative overhead 4,24,000. Here it is the 4 lakhs. Costing as absorbed under absorption will be credit 24,000. Under and over absorption is done by costing, right? Financial books of accounts does not absorb, it just records whatever is income. This is administrative overhead. Selling overhead, here it is 2,20,000. Here it is 2,46,000. So 26,000 rupees more. 26,000 rupees is over absorbed. Over absorption of selling overhead 26,000. Bad debt. Let me write it down. Bad debt as per financial books of accounts is 16,000. Costing books of accounts has not done anything. Undo what God has not done. 16,000 I will be crediting. Bad debt 16,000. Preliminary expenses 20,000. Same effect. Interest. Let me first start with sales. Sales is not a difference. Closing stock 50,000 units. It is a credit balance in financial books of accounts. Closing stock credit 50,000 in financial books of accounts, and it is 60,000 in costing books of accounts. 60,000 credit in costing books of accounts. Do what God has done. God has done 60,000 credit. We have done only 50,000 credit. I will be crediting 10,000 rupees more. So 10,000 credit closing stock. GP is just a balance. You don't have to tell you what is the GP in costing and what is the GP in financial books of interest 1,000. I'm drawing it. Interest credit balance 1,000 credit in financial books of accounts. Nothing is done in costing books of accounts because costing does not record any financial transaction. 1,000 credit. Undo what God has not done. We have done 10,000 credit. We will be debiting. Debit 1,000. We have credited 1,000. Now we'll be debiting 1,000 to cancel it. Debit 1,000. Interest received. Now you will say, sir, interest received is a credit balance. It should be credited. No, we follow the God blindly, right? We know I want answer of 1,94,000. So I will have to do everything what costing books of accounts has done. So only we have treated costing books of accounts as 40,000. Similar effect. Rent received. We have covered full financial books of accounts. Let us see whether we have covered cost sheet also. Yes, cost sheet also, each and every point we have covered. We can go ahead with just telling our reconciliation statement. It is 1,92,000 plus 19,000 plus 24,000 plus 16,000 plus 20,000 plus 10,000 minus 20,000 minus 26,000 minus 1,000 minus 40,000 is 1,94,000. This is nothing but reconciliation statement. If someone asks me why your financial profit is 192,000 and why your costing profit is 1,94,000, just to show him this reconciliation statement or reconciliation account. If he understands accountancy, he will come to know why there is a difference between financial and costing profits. Similar type of question, C 6.7. The trading and profit and loss account of the company for the year ended 31st March is as under. So financial statement profit is already given, which is 179,800. There is material, wages, factory expense, administrative expense, selling expense, preliminary expenses, written off, net profit. Sales is 50,000 units and closing stock is 2,000 units. It is worth noting that opening stock is not given. If opening stock is not given, then we will consider opening stock as 0. So how much goods will be manufactured? How many goods are sold? 50,000. How many is closing stock? 2,000. So it will be 52,000 units will be produced. In cost accounts, the factory expense have been allocated to production at 20% of prime cost. Administrative expenses related to production activity absorbed at 10% of factory cost. Selling expenses are charged at 10 per unit sold. Prepare the costing P&L account and reconcile the profit and loss with the profit as shown in financial accounts. First, we will have to prepare cost sheet. In cost sheet, I will start with raw material and wages. So if nothing is given, I will assume that in cost and financial books of accounts, raw material consumption and wages is same. Raw materials are 26,80,000 and wages will be 17,80,000. This will be nothing but my, which is 26,80,000 plus 17,80,000, 44,60,000. Factory expense have been allocated to production at 20% of prime cost plus factory overhead 20% of 44,60,000. 44,60,000 into 20%, 8,92,000. Total will be 44,60,000 plus 8,92,000, which is 53,52,000. Plus there are factory overhead which are related to production. They are administrative overhead related to production. Administrative expenses related to production activity absorbed at 10% of factory cost. 10% of 53,52,000, that is 5,35,200. This will be cost of producing 52,000 units. Total will be 53,52,000 plus 535,200, which is 58,87,200. This is the cost of manufacturing 52,000 units plus opening stock. And from financial books of accounts, we came to know that opening stock is 0 minus closing stock. How many is closing stock in units? It is 2,000. It should be valued at COP. Now what is cost of producing this 52,000 units? 58,87,200. So per unit it will be 58,87,200 is for manufacturing 52,000 units, which is 113.22. So closing stock, if absence of information, is valued at COP, which will be 2000 into 113.22, 2,26,440. 2,26,440. This will be my cost of goods of selling 52,000 units. No. 52,000 units minus 2,000 units. So this will be of 50,000 units, which will be 58,87,200 minus 2,26,440. 56,60,760. Plus selling and distribution overhead. They say it will be absorbed. Expense are charged at 10 per unit sold. Units sold are 50,000. 50,000 into 10 will be 5 lakhs. This will be 61 lakh 60,760, which is cost of sales. My sales is 62 lakhs. So costing profit will be 62 lakhs minus 61 lakh 60,760, 39,240 will be profit as per costing books of accounts. Let us start with reconciliation. What is costing profit? 39,240. Costing profit is the 39,240 and P&L account profit or profit as per financial books of accounts is 1,79,800. 1,79,000. So let us first tick mark. What are the reasons why there is a raw material and wages are same as per financial books of accounts and costing books of accounts? Factory expenses 9,50,000, 8,92,000. So factory overhead is one of the reason. Administrative overhead 535,200, 480,200. Selling expenses 2,50,000 and 5 lakhs. Preliminary expenses written off will not be appearing in costing books of accounts. Sales is same, closing stock 1,50,000 and here it is 226,440. This is one of the reason. Dividend received will not be in costing books of accounts. These are all the reasons why there is reconciliation. Who will be our God? Costing books of accounts will be our God. If you write down profit as per financial books of accounts over here and costing books of accounts over here, you can treat costing as your God. Do what God has done, undo what God has not done. We have also understood with previous two questions that under absorption comes over here and over absorption of overhead comes over here. Other all things will be doing logically. So we start with debit side. Factory expenses 9,50,000 and here it is 8,92,000. So it is under absorbed by 9,50,000 and 8,92,000. Minus 8,92,000 under absorption of factory overhead. I'll be finding out the figure. Administrative expenses 4,80,200. Here it is 5,35,200. It is over absorbed by costing. Over absorbed administrative overhead by 535,200 minus 4,80,200. Selling expenses 2,50,000, 5 lakhs. So again it is over absorbed. Selling overhead 5 lakh minus 2 lakh. Preliminary expenses written off. It is debited in financial books of accounts, not debited in costing books of accounts. Undo what God has not done. We have debited it. Now we'll be crediting it. Preliminary expenses written off 50,000. Let us go to credit side. Closing stock is credited in financial books of accounts by 1,50,000 credit, and costing books of accounts it is a 226,440 credit. 226,440 credit. I will be crediting excess of 76,440. 76,440. If I have credited 1,50,000, if I credit 76,440 more, I will be crediting 2,26,000. So it is 76,440 credited more. Difference in closing stock. You have done this. Dividend received is credited by us, not credited by costing books of accounts. Undo what God has not done. We will be reversing it. We will be debiting it 20,000. $20,000 will be dividend received. Anything left in this? The answer is no. We can verify. Let us first find out the answer. 9,50,000 minus 8,92,000, 58,000. This is 535,200 minus 480,200, which is 55,000. This will be 2 lakh. My answer should tell me 179,800 plus 58,000 plus 50,000 plus 76,440 minus 55,000 minus 2,50,000 minus 20,000 will be 39,240. This is tallied. This is how we do reconciliation of financial and costing books of accounts. Next question, 6.8. R Limited showed us a net loss of 35,400 as per their cost accounts, and it is a loss for the year ended 31st March. However, the financial accounts disclosed a net profit of 67,800 for the same period. The following informations were revealed as the result of scrutiny of figures of cost account and financial account. Thus all figures were revealed. Prepare a reconciliation statement by costing net loss as a base. Now try to understand, when we are preparing our reconciliation account, what we have done is we take financial profit over here, and we take cost profit over here, right? Now this question specifically says that you should start from costing profit. Please understand, we are drawing an account. It is not compulsory to read from top to bottom. You can even read from bottom to top. So you can take the same account and solve the question. It is absolutely correct. There is no problem in it. I am taking costing profit on a lower side does not mean I'm not starting with costing profit, right? The only thing to understand in this question is there is a costing loss. There is a net loss of 35,400 as per cost accounts. So there is a net loss of 35,400, but it is a loss, so it should be written in negative figure, or you can write it down on credit side. What I'm doing over here is I'm writing down on credit side 35,400 by costing loss 35,000. Once I write it down on credit side, I don't need to write down a negative sign. However, there is a net profit as per financial books of accounts, which is 67,800. So 67,800. Sir, this should not be written on debit side. No, because it is a profit, I'll be writing it on credit side. If there was a costing profit, I would have written as a closing balance in debit side. If it is a loss, I'm writing it on credit side. Other all things remaining same. Now forget about profit or loss. You just apply what God has done, what God has not done, and the same rule will be applied. See, in similar manner, we'll be solving the question. Administrative overhead under recovered. We know under absorbed will come over here. Over absorbed will come over here. Other all points I'll be doing logically. Administrative overhead under recovered 25,500. Difference in administrative. Factory overhead over recovered 1,35,000. Difference in factory. Depreciation under charge in cost accounts. So it is under recovered by cost accounts, right? Under charge by cost account is same as under recovered by cost accounts. Depreciation under recovery is 26,000. Dividend received 20,000. Dividend received will be credited in financial books of accounts. We have kept the format same, so costing is our God. We have credited financial books of accounts by 20,000. Costing accounts has not credited anything. We will be debiting it so that it is cancelled. Dividend received 20,000 debit. Loss due to obsolescence, charge in financial accounts. Loss due to obsolescence is charge in financial accounts, is never charge in costing account. So this is charge in debited to financial accounts, not done anything by God. We will undo it. So we will credit 16,800. Income tax provided. Please understand, income tax is not a charge to profit. Income tax is a distribution of profit. Excuse me. So it will be always written on debit side of P&L account. Nowhere this type of things does not come in costing account because it is not a charge to profit. It is distribution of the profit is distributed to government. A part of the profit is distributed to government. Debited in financial books of accounts. We need to undo it. We will be crediting it 43,600. Bank interest credited in financial accounts. Financial item will not be credited in costing accounts. It is credited, will be debiting 13,600. Value of opening stock. Now both the figures are given. In cost account, opening stock is 1,65,000. This is debit. In financial accounts, it is 1,45,000, which is debit. Who is God? Cost account. So we should work as per cost account. Do what cost account has done. It has debited 1,65,000. We have debited only 1,45,000. So we will debit more 20,000. We will be debiting 20,000 more. Difference in opening, closing stock. Now this is credit. 1,25,500 we have God have credited. We need to verify opening stock again because debit is all right. What we have debited? 1,45,000. What God has debited? 1,65,000. What we need to debit more? 20,000. We have debited 20,000 more. Yes, it is correct. In cost accounts, God has credited 1,25,500. We have credited 1,32,000. We need to debit it, reverse the effect of 1,32,000 minus 1,25,000. 1,32,000 minus 1,25,000. It is 6,500. Why we need to debit it? What God has credited? 1,25,500. What we have credited more? 1,32,000. So we need to debit 6,500 so that our credit becomes 1,25,500. Debit 6,500. Difference in closing stock. Goodwill written off in financial accounts. It is debited in financial books of accounts, not debited in cost accounts. We will reverse it, credit it in our reconciliation statement, 25,000. Goodwill written. See, if you will keep this and this position same, goodwill written off will always come on credit side. Notional rent of own premises charge in cost account. Charge means it is debited in cost accounts. If it is debited in cost accounts, we have not debited it. Do what God has done. We will have to debit 60,000. Which is notional rent. See, don't go into detail whether notional rent should be debited or not. Whether it is debited or not, that is not our question. Whether it should be debited or not, it is not our question. What is our question is how to reconcile both the profits. So it is creating a difference. We are just reconciling it. Provision for doubtful debts. Doubtful debts provisions is not done in books of cost accounting. It is done in only financial accounting. Debited by financial accounting, we need to reverse it, credit it. 15,000. It is bad debt. As this was the last point, our answer should tally. This is the reconciliation statement. Write down this we have taken as base. Right? It is not compulsory to solve upside down. You can solve downside up. Right? So we are for totaling. Let us start with this. 35,400 plus 15,000 plus 25,000 plus 43,600 plus 16,800 plus 26,000 plus 25,500 plus 67,800 minus 1,35,000 minus 20,000 minus 13,600 minus 20,000 minus 6,500 minus 60,000. Both sides are tallied. This is nothing but reconciliation between cost and financial accounts. Similar type of question, see 6.9. The net loss of Waywell Limited appeared at 1,18,500 as per cost records. It is 1,18,500 net loss. So it will come on this side, 1,18,500 net loss as per costing. We write down at last. If it is profit, we write down it on debit side. If it is loss, we will be writing it on credit side. 31st March. The following informations were revealed as a scrutiny of the figures of financial and cost records. These all are the points required. Prepare a reconciliation statement and arrive at a profit or loss as per financial accounts. Profit or loss as per financial. As I told you, in every situation you can keep a format same. Financial accounts on upper side, cost accounts on lower side, and you can have the similar type of answers in each and every question. We know now under absorptions will always come over here. Over absorption in cost account will always come over here. Factory overhead over absorbed in cost account 32,500. 32,500 factory overhead over absorbed. Administrative overhead under absorbed in cost account 38,250. 38,250 administrative overhead. Depreciation charge in financial accounts 4,55,800. Depreciation recovered in cost accounts 4,99,700. This is also debit. This is also debit. Who is God? Always a cost account. If we keep the format same, cost account will be our God. They have debited 4,99,700. I need to debit the extra money 499,700 minus 455,800. That is 43,900 more I will have to debit. 43,900 difference in depreciation. Loss due to obsolescence in financial accounts. This is debited in financial accounts, not debited in cost account. I will be debiting, I have debited in financial accounts. I will undo what God has not done. God has not debited. I will be crediting 11,400. 11,400, which is loss. Income tax provision made in financial account, debited in financial accounts. I need to cancel it. So credited in our reconciliation statement 32,650. Was income tax. Interest on investment not included in cost account. It is never included in cost account. Is 96,000. Credited by P&L account, not credited by cost account. We will reverse it. So debited 96,000. Stores adjustment credit in financial accounts. We are assuming not credit in cost accounts. So 12,800 it is credited, we will debit it 12,800. Stores adjustment. Because it was credited in financial accounts, we need to undo what God has not done. Value of opening stock in cost account 18,85,600. Financial account says 19,60,000. This is debit effect. This is debit effect. Let me give you another way of solving this. We normally find out difference and then decide whether it should be debited or credited. Do what God has done. What God has done, debited 18,85,600. Debited 18,85,600. 18,85,600. Opening stock, God has debited, we should debit it. Undo what God has not done. So it has not debited 19,62,500. I will be crediting 19,62,500. Credit 19,62,000 opening stock. Sir, will it reconcile my answer? The answer is yes. Otherwise, I would have credited difference between these two. Similarly, I am doing for closing stock, but it is credit. What God has credited? Credited 21,15,800. 21,15,800. God has credited closing stock. We are crediting closing stock. Financial books of accounts 21,98,900. God has not credited. We should debit it because we have credited 21,98,800. Sir, will it make any difference in the answer? No. Otherwise, we are treating the difference and putting it at a proper place. Had you done it directly, you would have debited a difference between this and this. Imputed rent charge in cost account. It is debited by cost account and not debited by us. God has debited it. We should debit it 1,80,000. selling and distribution expense not charged in cost account. If it is not debited in cost account, we should now credit it because we have debited in financial accounts. We need to cancel it. So 72,450 will be credited. Donation to Prime Minister Relief Fund. Donation is recorded by financial books of accounts only. Costing has no place where it can record a donation. Donation to Prime Minister Relief Fund debited in financial books of accounts, not debited in costing account. We will reverse it. Credit 11,000. Expenses written in P&L account, not written in costing account, will be always credited if you keep this format C. 11,000 is donation. Loss on sale of furniture is 7250. Again, it is recorded by financial books of accounts, not recorded by costing books of accounts. I will be writing it on credit side 7250. I will be cancelling this. Bad debt written off will be debited by financial books of accounts, will not be debited by costing books of accounts. If we have debited it, we need to cancel it. Credit 18,300. Have taken into consideration all. We need to just tally it. 32,500 plus 43,900 plus 96,000 plus 12,800 plus 18,85,600 plus 21,98,800 plus 1,80,000. 44,49,600 is debit balance minus 38,250 minus 11,400 minus 32,650 minus 19,62,500 minus 21,15,800 minus 72,450 minus 11,000 minus 7250 minus 18,300 minus 1,18,000. Balancing figure is 61,500, which is nothing but balancing coming on the side. So it is a profit as per financial books of accounts and not loss. Even if costing shows a loss of 1,18,500, your financial books of accounts would be showing a profit of 61,500. This was 6.9. Next question, C6.1. MS Abid Private Limited disclosed a net profit of rupees 48,408 as per cost books for the year ending 31st March 2019. So it is net profit as per cost books of accounts 48,408. 48,408, and it is as per cost books of accounts. However, financial accounts disclosed a net loss of 15,000. So net loss as per P&L account. If it was profit, it will go on credit side. Loss, it is on debit side of 15,000. The same period. On scrutinizing both the sets of books of accounts, the following information was written. Works overhead under recovered. Now we are already knowing if we follow this format, under recovered will come over here and over recovered will come over here. Anything which is debited to P&L account, not debited to costing account will come over here, and anything credited to P&L account will come over here. Works overhead under recovered 48,600. It is Works or factory overhead. Office overhead over recovered 11,500. Dividend received credited in financial accounts, we will cancel it because God has not credited it, will be debiting it. Dividend received on shares 17,475. Interest on fixed deposit again credited in financial books of accounts, not credited in costing accounts, so we will debit it. Interest on fixed deposit 21,650. Provision for doubtful debts, BDR, debited in financial accounts, not debited in cost accounts, will credit it to cancel it. 17,800 BDR. Obsolescence loss not charged in cost account, debited in financial accounts, not debited in cost accounts, will be crediting it. 17,200. Stores adjustment debited in financial accounts. It is debited in financial accounts. Now not debited in cost accounts, will credit it. 35,433. It is stores adjustment. Depreciation charge in financial accounts and depreciation charge in cost accounts. I am doing it by difference. Financial accounts, we have debited 30,000. Cost accounts, they have debited 35,000. Do what God has done. We should have debited 35,000. We have debited only 30,000. We will debit more 5,000. Depreciation 5,000 debit. I have covered all. I will be getting 5 marks for this. This both should tally. 48,600 plus 17,800 plus 17,200 plus 35,433 minus 15,000 minus 11,500 minus 17,475 minus 21,650 minus 5,000 minus 48,408. Answer will be 0. Both sides are equal. We have reconciled it. Now try to understand, if you keep the format same, we have done this, right? Under recovery will come on credit side, over recovery will come on debit side. Anything which is debited to P&L account, not debited in cost account. Debited to P&L account, not debited in cost account will come over here. That is on credit side. Credited in P&L account, not credited in cost account will come over here. I'm not telling you to mug up, but once you have a uniformity, you follow the uniform format, some things will become easy, and if you are making a mistake, it will definitely strike to you. Otherwise, the reconciliation is absolutely easy. Next, excellent question, 6.10. So if you have mucked up everything, have not understood some logical points of it, of course we have understood it in the form of God and a perfect art of solving the question, but you should understand why it is credited and why it is debited. Why we are following the God? Because on right hand side, that is on closing balance, we are writing costing profit. So we are trying to convert our financial profit into costing profit. ABC Private Limited has furnished its profit and loss account for the year ended and also given reconciliation statement. So they have given financial books of accounts and they have given reconciliation statement. So this is your financial book of account. Opening stock is of raw material, WIP finished goods. Closing stock is also of raw material, WIP finished goods. Sales is given, dividend received on shares is given. Purchase, direct wages, factory overhead, administrative expenses related to production, selling expenses, goodwill written off, interest on loan, legal charges, and net profit. And see how they have given reconciliation. Profit as per financial records is 1,42,000. Financial records, we write it down on credit side. So this is practically credit. Whatever is added means it is written on credit side. Whatever is deducted means it is written on debit side for us. For the format we are following, you can always write down this type of things in the question. This is credit, debit, and profit as per cost accounts, we write it down on debit side. You are required to drop the following accounts in cost ledger of ABC Private Limited. So in ABC Private Limited, you will have to form a ledger accounts. Material control account, WIP control account, finished goods control account, cost of sales account, and costing P&L account. We will be drawing all the related accounts of cost accounting that we have done in non-integrated system of accounting. Except GLA, we will be preparing everything. So this is financial books of accounts. Let us first find out raw material. This is opening stock of raw material. Opening stock of raw material comes in raw material stores control account. Opening stock. What is the figure? 95,500. But no. Why I should not write down 95,500? Because it is opening stock as per financial books of account. What will be opening stock as per costing books of accounts? Please understand. Raw material opening stock is over here. We have debited. See, opening stock is debit. We have again debited 2,500 in reconciliation. What does this mean? Costing account might be having more debit of 2,500. Sorry, we are deducting, right? We are debiting it. Yes, we are debiting it. Why we are debiting it? We might have debited 2,500 less. We are financial books of accounts. Who is God? Costing books of accounts. They might have done 2,500 more debit. So we have written 2,500 debit in reconciliation account. What does it mean? Costing books of accounts opening stock is 2,500 more than financial books of accounts. So raw material 95,500 plus 2,500. 95,500 plus 2,000. This is 98,000. Opening stock of WIP similarly is 45,000. WIP opening stock we have credited. What does it mean? We financial books of accounts might have more debited. By how much? 2,000. So costing books of accounts might have less debit of 2,000. 45,000 minus 2,000 is 43,000. WIP control account 43,000. Opening stock. Finished goods is 78,000. Again, it is written on credit side. Opening stock, finished goods, this is written on credit side, so will be deducted. Same logic as in WIP. 78,000 minus 3,000 will be 75,000. We are going to other figures. Two purchases. Does raw material purchase comes in costing? Yes. Absorb also comes in costing and purchase also comes in costing. Raw material purchase is 6,42,000. Raw material control account 2 GLA 6,42,000. Raw material cost incurred. Wages 2,22,000. Wages control account 2 GLA 2,22,000. Factory overhead incurred. See, right now we are not talking about absorb. Absorb, we will be seeing the reconciliation statement. What is incurred is important. Factory overhead incurred is 2,45,000. Factory overhead 2,45,000 to GLA. 1,98,500 administrative overhead, 1,98,500 to GLA. 3,42,000 to GLA. Goodwill written off is not recorded in cost account. We don't write down in cost account. Sir, then it should come in reconciliation. It will be there in reconciliation. Interest on loan, similarly it is in reconciliation. Legal charges, we don't write it down in costing books of accounts. Again, it is forming part of reconciliation. Credit side, is sales same in both the case? Always yes. 17,80,000. Closing stock. We need to now think about raw material, because now the closing stocks are credit. Raw material closing stock in books of accounts is 99,000, and raw material closing stock you have written credit. Raw material closing stock you have written credit. What does it mean? Costing might be having more credit and finance might be having less credit. So to match with costing, we have done some credit of 1,500. So costing is having 1,500 more credit as compared to your financial books of account. So 99,000 plus 1,500 is 1,05,000. Raw material closing stock 1,05,000. WIP closing stock 58,000. WIP closing stock is debited by 3,500. If it is debited by 3,500, what does it mean? You follow costing books of accounts. In costing, you have debited. In financial books of accounts, 58,000 was credit. In costing books of accounts, 3,500 would be less credit. So you have removed the credit of 3,500. So in costing books of accounts, your WIP closing stock will be 58,000 minus 3,500. 58,000 minus 3,500. $54,000. Finished goods is 80,000. Closing stock of finished goods is written credit. So costing might be having more credit. So you have credited 1,000 rupees more. So in costing books of accounts, closing stock finished goods would be 81,000. Dividend received on shares is not written in costing P&L account, sir. Then it should appear in my reconciliation statement. It is appearing in my reconciliation statement. I think we have covered all the points. We need to cover over P&L account. Necessary figures I have written it. Raw material, only one figure is pending, and I am assuming it is directly issued to production. So it will be credited to WIP. Whatever is the balancing figure. 98,000 plus 6,42,000 minus 1,05,500. 6,39,500. WIP 6,39,500 is raw material direct. Wages, in case nothing is given, everything is direct and I am transferring it to WIP, 2,22,000. WIP 2,22,000 will be nothing but wages. Factory overhead. See, it is not appearing in reconciliation. What does it mean? Whatever is incurred is absorbed. Factory overhead is absorbed by WIP. 2,45,000. WIP 2,45,000 is absorbed as a factory. Administrative overhead, if directly related to production in finished goods, if not directly related to production in cost of sales, I am assuming it is directly related to production, I am transferring it to finished goods. 198,500. Sir, how you come to know there is no under absorption or over absorption? Because it is not appearing in reconciliation statement. If there was under or over absorption, it would be appearing in reconciliation statement. 198,500 finished goods. Selling and distribution will be transferred to cost of sales. 3,42,000. 3,42,000 selling overhead. I can tally WIP, this is nothing but cost of goods transferred or which are produced, which will be transferred to finished goods. Whatever is the balancing figure. 43,000 plus 6,39,500 plus 2,22,000 plus 2,45,000 minus 54,000, 10,95,000. So 10,95,000 will be transferred over here. It is transferred from WIP. Whatever is the balance will be transferred to cost of sales. This is nothing but cost of goods sold. 75,000 plus 1,98,500 plus 10,95,000 minus 81,000. 12,87,500 will be transferred to cost of sales. This is from finished goods. 12,87,000 will be transferred to costing P&L account. 12,87,500 plus 3,42,000. 16,29,500. 16,29,000. 16,29,500 is a cost of sales and sales is 17,80,000. This will be also transferred to costing P&L. 17,80,000. So costing profit and loss will be the balancing figure. 17,80,000 minus 16,29,000, 1,50,000. 1,50,000. Will it tally? Yes, it will tally over here. 1,50,000. It will tally in because the reconciliation is given. Reconciliation starts with financial books of account it ends with costing profit, and we are finding out costing profit, and costing profit is 1,50,500. Hence our answer will tally, and it is absolutely correct. So let us complete even this chart. Why there is a difference between costing profit and profit as per financial books of accounts. We understood there might be a difference in valuation of opening and closing stock of raw material WIP finished goods, over and under absorption of overhead. Some items which might be written in financial books of accounts might not be written in costing books of accounts, like we have seen bad debt reserve, income tax provisions, any other provisions, donations, stores adjustment, and we have already understood like interest, dividend, and other financial items. This will be written in financial books of accounts, will not be written in costing books of accounts, will appear in our reconciliation statement, and as we have done writing of expenditures. And there will be something which is written in costing accounts and not in financial accounts. We came to one point which was notional rent, which was charged to cost accounts and which was not charged to financial accounts, because notional thing financial accounts does not record. These are the reasons, various reasons why there is a difference in profit between cost and financial statement, and we absolutely understood how to prepare a reconciliation